Good morning, traders. Welcome to NinjaTrader Live. I'm Maggie Lake. Joining me today, Senior Macro Strategist Craig Shapiro, Senior Economist Tracy Shuchart, and Senior Market Strategist Jim Cagnina. Good morning, everybody.
Good morning,
Good
Maggie.
morning,
Good
all.
morning.
Good morning. Good morning. Larry in the chat. Hi, everybody. Says, good morning. May everybody be on the right side of their trades today. Hear, hear. I love that
Hallelujah.
sentiment. Good group to start the day with. Although looks like that sort of feel-good vibe is not filtering through to the markets. A little bit of a negative tone developing as we get closer to the open. It looked a little sideways earlier, but as Jim said, things are looking a little heavy right now. Oil higher, stock futures lower. I think everyone's just trying to wrap their head around the headlines, which are still coming in kind of fast and furious. Shai, what are you watching in the news?
All right. So, first and foremost, I just want to state that there are a lot of headlines in the news concerning the war of Iran, many of which I am skeptical of. So just be careful what you hear. It may or may not be true. But moving on to what I do know. Concerning the war in Iran, obviously, you say markets feel heavy because even overnight strikes have persisted between Iran, Israel, and the U.S. So we had Iran carrying out overnight missile and drone strikes on Israeli cities of Tel Aviv, Eilat, and Dimona, and as well as U.S. bases in the Middle East. And Israel also launched a wave of strikes in Iran, including Tehran. So, even though we said we had this 5-day pause on energy infrastructure, just know that strikes are still happening anyway. That's why the markets may feel a little bit heavy. In other oil and gas news, the Iran-Turkey gas flow is said to stop after the South Pars strike. That is a pipeline between Iran and Turkey to Europe. And then we have the EU is scrapping their April 15th date for the ban on Russian oil. In economics today, we had PMIs out for the Eurozone, UK, Australia, and India overnight. And they show first signs of a synchronized shock emerging in the business surveys, revealing how the Iran war's fallout is crippling growth and stoking prices. Why is this important? Because we do have our manufacturing PMI data out this morning at 9:45 a.m. this morning, Eastern time. So we'll see if that is also filtering to the U.S. and finding out if those prices, particularly in the energy markets, are filtering down to the manufacturing sector. Moving on, in tech, we have Musk just made an announcement. He is going to build what he calls the Terafab, and it is an AI chip making company. He wants to rival the world's biggest company, TSMC, and do it in volumes far beyond the industry's current capacity. The project would require 5 to 13 trillion with a T in capital spending, according to estimates. And that would fund 140 to 360 new factories, making 50,000 wafers per month. So that is what Musk proposed yesterday. We'll see if that project gets off the ground. And of course, Alibaba unveils a new chip to meet surging demand for AI. Moving on to private credit. We haven't talked about that in a little bit. We've had the ECB is starting fresh checks on banks' exposure to private credit. The ECB is asking banks for details of their dealings with direct lenders because of, obviously, the string of high-profile blow-ups we have seen since last year. And so they are worried about banks' exposure to that market in Europe. In commodities, we have Turkey mulling tapping 135 billion gold reserves for the lira's defense. The bank says it held discussions about conducting gold for currency swap transactions in the London market. Now, this is why this caught my eye. This is not rare. This is kind of a repeat of their 2021 playbook, which they began shipping gold back from Turkey to London. And by the end of 2021, it was holding 78 tons at the Bank of England, using it as a collateral for FX swaps to defend the lira. Now, gold did move on this because if this is a sign, move down on this a little bit, if this is a sign that we now have sovereign sellers, that spooked the gold market a little bit. So Turkey holds about 614 tons of gold, and even a partial mobilization of this puts meaningful supply in London. And we have kind of Venezuela parallel is a cautionary tale. Venezuela followed the same path, and they swapped gold at the Bank of England for FX. They let that swap lapse in 2017. They lost the gold collateral and then spiraled into hyperinflation. So cautionary tale there. And then more resource nationalism. We have Russia suspending exports of ammonium nitrate until April 21st, 2026. Obviously a sign that the fertilizer crunch is now impacting the markets. Moving on, last but not least, we have data. 8:15 a.m. Eastern Time. We have ADP weekly employment change at 8:30 a.m. Eastern. We have Philadelphia Fed non-manufacturing activity. 9:45 will be the big deal with U.S. manufacturing PMI. And then at 10, we have Richmond Fed manufacturing index. So be aware that we've got a red folder at 9:45.
Yeah, it's so much news, and it seems like we're still kind of going to be held hostage to any headlines coming out of either Iran or the region or Truth Social, which makes for kind of a tough environment. Craig, what's top of mind for you today?
Yeah, I think you're right. I think we're not easily able to eliminate from this highly correlated trading pattern that is very news driven, right? We saw yesterday stocks up, vol down, bonds up, dollar weak, gold down, oil down, on back of hopes of a deal to be reached, imminently, let's say, over the course of this week. And then as the day progressed and Iran started to push back against some of that communication and some of the fears overnight given the attacks, you're seeing the opposite, right? You're seeing stocks down, bonds down, dollar up, vol up, crude up, right? It's one trade, one market with different degrees of beta attached to those various asset classes. And so we are still in the thick of it here. The deadline is supposed to be this Friday. I suspect, it'll get pushed out again. But look, I think as investors, we need to think about, what are the positions people are going to be thinking about, for the next quarter, right? Is your portfolio set up for the economic environment to persist that we have now? With one, Tracy mentioned earlier, some of the private credit concerns. That's only going to be getting worse. The supply chain continues to be basically shut down, not going to be restored very easily. Think about your portfolio. How's it impacted by that? As companies start to come out and start to talk about forward guidance for the rest of the year. We'll see some of that, this morning with the PMIs and through the rest of the week and into next week with some of the economic data. But, what's the reality that exists after whatever resolution comes? And it's not a great one, right? We're seeing elevated inflation expectations. We're seeing a deteriorating labor market that's likely not going to be improving rapidly amidst all this geopolitical uncertainty. And we're seeing a Fed that is really on its hands here, not able to provide incremental stimulus and interest rate cutting because of the elevated inflation expectations. So that's the environment that we're going to have here for the next couple quarters. Position portfolios and start thinking about trades that benefit or get hurt in those environments. I think is the right way to be thinking about this after the highly correlated fog of war type trades start to dissipate.
Yeah. We sort of out of the fog into the frying pan. That sounds like a horrible environment that we have to navigate. There's not a lot that So I think it's gonna be tough. And then of course everyone will be looking for like what breaks it, right? What if something were to be more positive that develops, but it's hard to see that right now. Jim, what's on your radar today?
Yeah, I mean, yesterday's enthusiasm seems to be short-lived right now. I mean, I do feel like there's a little bit of coiling or sensitivity in the equity markets for probably for these next 4 or 5 days, unless some other extraordinary news breaks. But we hit almost 67.50 in the SPOOs yesterday. Sellers just pushed this thing all the way back down. I mean, 135 points since then. So we're kind, we don't have an equal and opposite big red candle today on the downside, but we don't have continuation buying either. So it's kind of settled, into a low 6,600 handle right now in the mini S&P, and I think we're seeing that same kind of little bit of a risk-off type of mentality in most of the markets across the board. Crude oil's up a lot. That's going to be a big one to talk about. And, it's all, like, to Craig's point, all these markets are really trading kind of macro systematically as opposed to non-systematically, except for maybe something like gold and silver, which we'll talk about in the Edge report. But, they're all so tightly correlated, either positively or negatively right now based on this macro news, that's just the world we live in. So we're going to have to keep that in mind when we kind of look at, which is kind of good for day traders because you could kind of look at one market to give you an idea what's happening in the other market. Right now, I'm looking at treasury bonds as my guiding light, so to speak. And, we're back down to a 112 handle after trying to get past a high 113 handle the last day or so. So we're going to keep an eye on that market today.
Yeah, it reminds me of that quote that farm had, like everything you think you're trading this, but you're just trading crude oil. Like everything is kind of filtering back.
Yeah.
Tracy, with the data coming out, sort of interesting because I know everyone's going to be looking to see whether we're starting to see the effects. For central banks, they may not be able to cut rates, but we have the market starting to price in rate hikes. If we start to see weakness in the data, will we see people sort of pull back away from that idea that we're going to have a hawkish central bank? There's been a lot of, I know, analysts pushing back on that, saying, how are rate hikes going to help a supply shock inflation? Like, what is that going to do except create more problems? If we start to see weakness in manufacturing, in the labor market, will that cool talk of potential rate hikes? I know it was more priced in for ECB and BOE than it was for Fed, but will that sort of change the conversation around central bank policy?
I think slightly. I think this PMI is going to be important because this is going to show whether purchasing manufacturers are paying more money for goods and services and how higher energy prices are affecting their business. So that is inflationary, but at the same time, a weaker labor market is also a purview of the Fed's mandate, and that would put the Fed in a very sticky situation. Now, if Warsh is confirmed, which it looks like he will be, I don't think we'll see rate hikes in the U.S. by any stretch of the imagination, but that could put off rate cuts. Everybody was initially expecting a rate cut immediately after he took the Fed chair in June, and now that's really off the table for the whole year, basically. So we'll have to see. I think the Fed's in a very sticky situation, as with every other central bank.
Yeah. Emmy saying, would you guys say participants are uninterested because they can't trust anything? Is that, I don't know, does it feel like they're uninterested or they're just not, when in doubt, this is the time to kind of be on the sideline? How are you feeling in terms of sentiment, Craig?
Well, I went on a little diatribe about that yesterday. But look, I think there's an element of market participation, and when I'm talking to folks and reading what people are having to say, that suggests that as you become more concerned about the fog of war and the truth telling, you become a little bit more uncertain about the levels of conviction that you can hold in your portfolio, right? And so. In an elevated vol environment with dramatic uncertainty where headline risk is flying all around, you're more likely to play smaller. And so if everyone's playing smaller, then liquidity is being withdrawn. That's an adverse backdrop for trading. And so I think the fact that we can't necessarily trust either side and what they're saying makes it just more difficult to hold positions with conviction. And if that's the understanding and that's the environment, then everybody plays smaller. And if everybody plays smaller, it's a less liquid market, and that's a bad setup. So I think everybody would benefit from an environment where we know that what the outcome is going to be. Are we really in negotiation? Are we really closer to a deal? That would be great to know, and that would, I think, give people conviction to reestablish positions. But really, in this environment, it's very difficult. I think that means that hedges are still top of mind. That's why the VIX is going to remain elevated. It's going to be harder to hedge your portfolios, with overnight zero data expiry, and so that's why we're seeing some of the back end of the vol complex being a little bit more bid. Real big money investors are thinking, I need to have some hedges on. I don't know, if a deal is going to be made in 5 days, I need to protect. And so I think that environment creates a little bit more chop, a little bit more volatility, a little bit more uncertainty, and it makes it harder for people to, re-engage with maximum position sizes.
Yeah. Streamside saying, does it feel like institutions are playing smaller or just retail? It's a good question. I don't know if we know.
Yeah,
but.
look, I mean, the prime broker data suggests that gross exposures across the hedge fund complex are still quite elevated. They've been coming down a little bit, but they're still above kind of the 80th percentile. So we're not seeing a kind of wholesale liquidation across institutional strategies yet. But, performance hasn't been great. It was great to start the year. It's, I think a lot of folks have given a lot back, and the last couple of weeks have been very choppy, very tough to trade. And so we've seen various asset classes that have done incredibly well give back all their gains and more, right? We talked about that with precious metals already. We've seen that with some of the dollar trades. The EM equity exposure has given a lot back. The European exposure has given a lot back. So I don't think there's a lot of P&L out there in the institutional community to really re-engage in big size amidst all this uncertainty. So yeah, you're seeing kind of a gradual, check back in some exposures. And then for retail has been very strong really up until a couple of weeks ago. And I've seen some stuff from Goldman and from Citadel that says the retail buying dynamic has started to dissipate a little bit here. So it seems like even retail has started to sit on their hands a little bit and saying, look, maybe it's better to wait and see this thing out.
And
but I mean, even in from a futures trading point of view, the micros is a great example. 400,000 traded in the E-mini S&P already, and the micro Nasdaq almost 600,000 traded already. Micro gold. 376,000 traded already. So there is a lot of retail participation trading the futures markets from at least a day trading point of view.
ADP weekly employment change came in, so I just wanted to shout that out. The U.S. private payrolls rose an average of 10,000 a week in the last 4 weeks. That's how they do it. Prior was 9,000, so a little bit better than the prior. It's weekly data, though, so take that for what it is.
Yeah. I mean, it's always good to, but, we're going to be watching for sort of the cadence, right? Like all these little pieces will matter when we start to plug them all together. The Streamside also said he feels like a cat in a room full of rocking chairs. And that might be the sort of the visual we have today. Thank you for that. Because I think a lot of people feel like that. Listen, I don't want to underscore one follow up on Craig's point. I noticed yesterday, just an observation, that so many people were talking about manipulation of the market. And I thought that was such an interesting word that they were using. And it seemed across the spectrum. Like, I don't know everyone and what their posture is and, or their politics or anything, but it seemed like so many people felt like that was the word to use. And I just took note of that because I think that kind of plugs in to what we were talking about. I don't want to underplay the private credit headline that you mentioned, Shai, because I think this has been a drumbeat underneath all of the war, and it's not a positive one. Apollo in the news today about the latest to limit withdrawals. I mean, it's on the front pages. I think some people had a sense that this was maybe going to happen, but that's a really negative backdrop, and that's a big player in that space. Craig, is this just going to be a drip, drip, drip on this, or does this suddenly become more problematic, this private credit story?
I think it's probably more the former until it's the latter, right? How do you go broke, slowly at first and then all at once? But I think this is the type of thing, it festers in the background. We keep getting these headlines of gating, of high redemptions. I think there were some downgrades last night to junk, which has interesting implications for who can hold types of securities, right? When things get downgraded to junk credit, anyone with an investment grade mandate has to be, becomes a forced seller. We saw that type of dynamic play out, obviously in 2007 and 2008 with some of the subprime stuff. So, look, this is going to be in the background. It's not going to go away very easily. It's clearly something that the Fed and other central banks are mindful of, and it creates a more strained funding environment, right? And as the hyperscalers are commanding a larger and larger portion of the capital markets as they build out capacity, they're crowding out other areas in the market. And so, anybody else who's affiliated or not affiliated with those sectors is going to see higher cost of capital kind of across the board. So it's just raising the cost of capital everywhere for a highly levered financial system. And so, these are the types of things that are going to be out there. We're going to be dealing with throughout the course of the entire year. It's part of the reason why, more and more folks, want to see the Fed cut interest rates to kind of, be out in front of this. Not that necessarily it's going to matter, a tremendous bit, but it will help on the margin. But yeah, I think this is it's going to be with us all year. We're going to keep getting these types of headlines. It's going to be a headwind for growth. It's going to be a headwind for employment. And it's going to make it a very tough operating and economic environment here for the rest of 2026.
And we literally, as we were talking, just had another one. Eris limits withdrawals from its $10.7 billion private credit fund. So we had Apollo earlier this morning, and now Eris.
Yeah, and these are big players. I mean, it's like, and this is, and I was speaking to somebody yesterday who said, I was asking about sort of the contagion effect. And it's interesting, Tracy, the ECB's asking to check. We keep hearing it is ring-fenced in the private credit, different than when the subprimes were kind of throughout the traditional banking system and investment banking system. But I understand why people are skeptical about that. I mean, maybe it's good that they're checking to see, but I think this is that kind of, as you say, Craig, this background worry that is, an isolated problem until it's not. And I think that's going to continue to, even when people put war off to the side, like if there was a resolution, I had a question from someone with, like, if the war goes away, are you bullish? And the person we were talking to said, well, more bullish, but not really, because then we still have all these other problems that are unresolved, and that being a really big one. And I know it's on the minds of folks in the chat too, because it comes up every day. So certainly something to be cognizant of. We are in a little bit going to be able to talk to a guest about oil and the situation over there, Tracy, but shortages. That Russian headline, I think, would be very concerning to people as well, since we're checking through the list of things to worry about. Does it seem isolated, or is there a concern that more export controls are going to be put in place?
No, I think this is not the first example of export controls. You are going to start, every time I see one, I post it on Twitter with resource nationalism, so you can check that on my Twitter. But we are seeing more and more countries obviously limit exports of fertilizers, of oil and gas, of products, certainly because we have a supply crunch coming. And so I think we're going to see more and more of this, what I call resource nationalism, where countries are going to defend their domestic population over exporting. Yeah.
Craig, what are you going to be watching for today in terms of, what's going to give you the lead on sentiment? Is oil the main driver, or should we be, paying more attention to bonds since, that's been a concern?
Yeah, I mean, we do get data again, today at 9:45. I don't think it's going to be something that people focus tremendously on, but if it shows that the pace of economic activity really is, decelerated quickly, or fears about inflation have moved up, quickly, right? We're only, that data point is, 2 weeks into the war, let's say. So, we don't exactly know, but I think that's going to be less important. I think, look, we're kind of beholden to the headlines, right? And you saw throughout the course of the day yesterday how the tape traded with obviously the Trump announcement and then the backtracking from the Iranians and then a missile strike. So I think unfortunately we're going to continue to be in that dynamic. And some of that weakness this morning I think just reflects the overnight activity. I suspect Trump will be speaking at some point, throughout the course of the day, whether it's in front of the helicopter or whoever knows where, and he'll continue to speak that constructive tone because he's sensitive to markets, right? And this is important that the administration doesn't allow for the markets to really get away from them here, whether it's the bond market or the equity market. I did see some people say that the 5-day delay helps put the Marines troops in play by the end of the week. Maybe that was part of the rationale there too. So, but look, I think if we don't start to get momentum that talks are happening, or consistent momentum that talks are happening by the end of the week, people are going to start to look to the weekend and say, I don't know, this is a dicey setup again. I may need some hedges on for the weekend. And so we'll get into that traditional pattern that we've been seeing here since the start of war, which is the markets bottom on Sunday. They rally through Sunday night into Monday, into Tuesday, and then they fade from Wednesday, Thursday into Friday because of fears about the weekend again. So I suspect that's a type of pattern we'll get again this week, unless we get confirmation that, meetings are happening, over the course of the next, 48, 72 hours.
Yeah. And I think the bar is going to get higher, right? It'll take more than a tweet. It's going to take something a little bit more, I think, verifiable for them to start to think it's real. Fantastic stuff. Okay, Craig, thanks so much. We'll see you in the chat. It is time for this morning's Edge Report. Take it away, Jim.
All right, let's start with the 30-year U.S. Treasury bonds. This is my North Star right now. And some interesting things happen. We're back in this trend channel on the way down, right? And we've started this trend channel all the way back at the beginning of March, not surprising. What happened yesterday, we had kind of a nice little bit of a move up, right? And we tapped what I'm going to call the piercing line of this benchmark candle. We didn't go through it. We didn't close above it. This is telling me that buyers failed. Today we do have even a more, a bigger fail, right? We're down on the day so far. Again, we're going to be looking for that piercing line of this green candle as well, but we're well toward that level. And it's a 112 handle, not a 113 handle. That kind of pop that we saw yesterday based on the news was just a one-time thing. Sellers are in control right now. The trend channel is negative. We have this big bear benchmark candle. Moving averages are negative. RSI is negative. Cash yields are up to 4.94% last time I looked this morning. So 30-year bonds are definitely negative. Let's shoot over to gold right now. Gold is the story for me of the day. And let me just open up this daily candle chart really quickly here. Significant sell-off in gold has been happening. We have fast-moving averages like the 8 crossing underneath the 21, crossing underneath the 50. These are all EMAs. We have the 21 about to cross under the 50, and we have that 150-day simple moving average we're right at right now. We do have a swing low at 43.19. That's on my radar screen right now. We wicked through it yesterday, and today we tapped it again. So, with rates up, dollar up, fear, but redirection is into the U.S. dollar instead of this possibly. So we'll see if, a micro reset after a huge rally. I think that's what's happening here. So let's go over to the intraday chart. And I want to see 2 days in a row here. Interestingly enough, we do have the point of control yesterday is exactly the same as the point of control today. But we're in a tight range. Look how tight the range is so far this morning overnight. So there's no trend. Everything's kind of just wiggling around that session VWAP right now. So I'm going to keep that on my radar screen for gold to see if we have continued pressure to the downside. Just kind of looking from target point of view. Let's start with the upside. We do have the top of the London initial balance is pretty close to the highs that we've seen on the session, around $44.45. We do have that 0 DTE put support level at 4,500. Should we get a rally? Should we spark a rally? Continuation buying can get us to previous session's high at 53.37, and then that MenthorQ 1-day max at 45.71. Let's go back to previous session size, 45.37. Let's go down the downside, though. Session VWAP has been pretty good, right? We broke through it kind of 230 this morning. We're trading above that session VWAP right now, but again, tight range, kind of sideways right now. We're going to test it again in a second. And on the downside, we have the pivot down at 43.49. And then we have a blind spot in JAX 3, pretty close to that 43,000 level. Below that, JAX 2, a little bit further down at 42.64. And the one-day min is all the way down at 42.43. So there are targets on the upside and the downside in both of these markets. Let's just shoot over. Heating oil is the market I really want to talk about today. This is my inflation gauge, by the way. Let's get these charts kind of switched over. Look at this rally, 52% since February 27th on the front month of the ultra low sulfur diesel market here. And again, this powers the supply chain, whether you like it or not. This is definitely an inflationary peak. So again, I'm looking for a continuation rally here. It seems pretty strong right now, sitting right at that AMA. We'll see if we can get a breakout above it. That is this morning's Edge Report. Back to you, panel.
Thank you so much, Jim. We'll see you in the chat. Before we get to this morning's guest, let's have a look at the fantastic lineup for today. We are going to be talking to AbdulAziz in just a moment. Later, TTrade will be here for Tape Talk. Merritt, Black, and Chris will trade the open. We've got Leo and Stowe for midday markets. And trading the close will be Salma, Jack, and Joey. All right now, let's welcome AbdulAziz. He is a consultant in the oil and gas industry. AbdulAziz, good morning. Thank you so much for being with us.
Thanks, Maggie. Great to be with you.
Good morning, my friend.
Tracy.
So, first I want to tackle kind of the distillate market right now, and then we'll get into the oil markets. But the bypass infrastructure we have to move crude, such as the Yamal, the Yanbu pipeline, but roughly 30% of Europe's diesel and half its jet fuel came from the Gulf entering in 2026. There's no pipeline for refined products. So how do you see this distillate crisis playing out, and is there enough refining capacity outside of the Gulf to process the crude that is going through?
Well, 4 weeks ago, you were in Riyadh. Who would have thought we would be here talking about this, right? And you see things unfolding so fast, and we couldn't predict a situation like this. But for Europe, they get a double whammy, since not only is it a matter of getting crude or getting jet fuel, now they're really short on accessing LNG or gas of any form, whether it's LNG or piped gas. And so what that impacts, it impacts the hydrocrackers within the European refiners. So it's not getting the gas to operate the refineries and not getting the feedstock to put them in for the maximum throughput for the refineries. It's a very difficult situation for Europe. How would they diversify resources, whether it's gas or crude? That remains a big puzzle. And I don't see really any light at the end of the tunnel unless there is some sort of a mitigation of the situation in the Gulf. That's one thing. Another thing I want to remind everyone, back in 2022, when we were talking about the Russia-Ukrainian conflict, we talked afterwards about the redrawing of the dynamics of how things flow from Russia to markets, and how Russia was able to kind of diversify how it was loading its crude to markets. In this situation, the diversification is only for a contingency plan. Yanbu is a contingency of the Gulf. Saudi Arabia was very successful in diverting the flows from the East Coast to the West Coast, but not every country in the Gulf has that privilege. Definitely not Iraq, not Kuwait, not Bahrain or Qatar, and maybe to a certain extent the UAE, but not within the capacity that the markets have been anticipating. And it's because of that we see, yes, Yanbu is a great contingency plan, but markets still expects more supplies. Again, this is the largest supply shock markets ever witnessed over our perceived view of the markets over the past few decades. But everybody's paying attention to U.S. markets, particularly how liquidity comes in, how other commodities play out, and how the equity markets plays out. But the real epicenter of all of this is actually not the U.S. It's actually the Asian markets, because the risk premium is very high in Asia, whether it's China, India, Korea, or other countries that have always been product exporters to the markets. And within the first week of the Iranian war, we've seen most of these countries starting to limit exports to the Asian markets. It's not an easy situation, but I think people are under the impression that we're witnessing the shock now. I tend to disagree. This is not the shock yet. And when the shock hits, first it's going to hit jet fuel. And then 2 or 3 weeks later, it's going to hit bunker fuel. And then later on, it will go into the middle distillates. And so it's staged until we get to the situation that really describes how bad the shock is.
And then also I wanted to ask, everybody talks about the flows being halted through the strait, but let's talk about the production. Not many are talking about the production that's actually been forcibly shut down, in, for example, Iraq, Kuwait, some of UAE, Qatar. Really, what is the realistic restart time if everything changes tomorrow and we found peace, right, on a dime? Realistically, how long is the restart time, and how much of this production do you think we permanently lose if this war drags on for 90 days or more?
Excellent question. People think it's a switch, and once you get that switch on, everything goes back to flow. Unfortunately not. It's not for the typical geological compartments of sandstone reservoirs, but in the Middle East, these are carbonate reservoirs, which means they're far more complicated to manage the pressure regime, the temperature regime, and then getting the production back in flow. Not only that, because of the scale and the size of these fields, it's not easy to reoperate them that quickly and to get all the geological, the production and the simulation data back in track, to put that production back in. It takes weeks, if not months. Iraq fields, especially the carbonate reservoir fields, are shut in. Same for the North Field in Qatar. That's a big risk. And to reignite the production into reasonable levels, it will require time, but it will also require a lot of effort to stabilize the reservoir flow before getting to production. It's not as simple as jumping into a pool and getting the oil or gas out of it. It's far more complicated.
I'm just taking notes, and I'm going to let you two continue to go at it. I just want to jump in because this is fantastic, and I think the kind of reality check we need. You're saying that we haven't seen the shock yet. This is not priced into markets? The disruption that we're going to see to jet fuel, to bunker fuel, and are we talking about significantly higher prices, or are we talking about outright shortages?
Well, it's a combination of both. The shortage is already there, but what we're the only gauge people are looking at is pricing. But it's not about pricing, because if airlines start to limit their flights, and then business goes into different zones of negative cash flow, then it's a completely different view of how things are unfolding. I think people are not aware or not paying attention as to how oil and gas and products are really integrated into almost each and every bit of any industry. The value chain of the oil and gas has been already affected, but there are other value chains within helium, sulfur, aluminum, all types of material, raw materials. It's the cost matrix that is shifting completely. And that cost matrix would take time to evolve into the new pricing regime. And that is when people really start to connect the dots and then see how the shock is really hitting.
Mm. And have people, we had just this morning, Russia suspending their exports of ammonium nitrate until April 21st. That's just, one sign of this. Should we expect more of what I call resource nationalism? And how is that going to affect the supply chains?
Well, it tells me two things. I mean, yes, you're right. It's export. Resource export nationalism, yes, but also there is a fear of domestic markets falling apart. And if domestic markets, whether it's in Russia that is severely sanctioned or other regions, and then the whole labor force becomes crippled, and then that kind of propagates all the way to industries and exports and currencies and all sorts of things. Nobody expected Russia to halt the exports, given the situation, the financial, the monetary situation of Russia. Nobody expected it. But to see it coming from Russia, it only tells you of how fear has already hit state-level decision makers to take the precautions before they happen. And I think India would be under my microscope, to be honest. It's India and China that I'm watching closely. And if anything happens there, then markets would see it.
Abdul, what do you when you're talking about them acting? What would you be looking for? What would they halt exports of? And when you're talking about Asia being the epicenter, we already know that there's been some shortening of work weeks. We're feeling the sort of real-time effects. It doesn't get as reported in the West, but this is the sort of tip of an economic crisis that seems to be playing out. Do you expect that to get worse? Is there any way for them to replace the supplies they're missing to prevent social unrest, basically?
Absolutely. I mean, it's very difficult to wake up every morning and feed 1.5 billion Indian and 1.8 billion Chinese. You need fertilizers. You need nonstop access to fertilizers. You need nonstop access to transport fuel. You need nonstop access at reasonable prices, of course, because if prices change, not everyone in the Asian region has that privilege to access capital and go to access food and transportation. We have to be reminded, China and India account for about 50% of global GDP. And if we add the ASEAN region into all of this, this could go up to 65, almost 70% of global GDP. If that is affected, then global GDP is certainly under a massive crunch. If the product product market is not really seeing a light at the end of the tunnel, by that I mean refineries are not able to access feedstock, refineries are not able to use the rationalization and then get the maximum throughput of what they produce, then it gets into a situation where refineries become concerned about their own operation. And that becomes more critical than getting crude at a certain price or not.
And what are your thoughts on, and I don't mean to put you on the spot, but, we did have President Trump come out and kind of shake up the markets yesterday, saying that, he was going to give a 5-day reprieve from targeting energy facilities, and that they were speaking via intermediaries to Iranian officials, which was then denied. What are your thoughts on, what are your thoughts on how that plays out? And are we going to see a quicker resolution than we initially may have thought?
The geopolitical situation is quite complex. I think President Trump is very concerned about market sentiments. And he put that note yesterday at market opening, and he gave a 5 days period until market close. So he's very concerned about how market digests that. But the geopolitical situation is unfolding quite complex. How would that be? How would that affect? Number one, the priority is how would that affect access to Hormuz supplies is the one most critical gauge to really know how this is being resolved. Now, if that becomes, prolonged into further weeks, then more pressure would be on markets. But bear in mind, that's not the only issue. There are other issues within the GCC region. The bigger question in the region is, after all of this, what are we going to end up with? What type of Iran will we see after this? And who's going to lead it? And most critically, what most people fear is a vacuum. If a vacuum happens in Iran, and we know what happened in Syria before and the vacuum that was caused back then the situation would become far more fragmented, uncentralized, and unmanageable. So there is a big concern about how things will end up with time and what is the end result afterwards. It's a big concern. We hear through media outlets that there are, backdoor communications or mediation, but still nothing really solid. I have to say we're witnessing in the region less of these attacks, but they still happen. I want to also mention that the issue with the tankers, or whether it's the crude and gas tankers or the shipment tankers, it did not start by the conflict affecting oil and gas. It started by the insurers not being able to take that liability. And I think that is the word people need to focus on. Who's going to take the liability and who's liable for this? And how does the geopolitical situation resolve the liability that is within the passage or the access of the tankers?
AbdulAziz, there are so many more questions than answers right now, but I think you really helped us focus our minds on the ones that we should be paying attention to and the sort of stress points that we should be focused on. So thank you so much for your time. So appreciate it.
Thank you.
Great to be with you. Many thanks.
And Tracy, so fun to see you both on screen together, because I know you chat online and are in similar groups, but felt like a reality check there.
So absolutely. And, that's how I kind of wanted to talk about things that people aren't talking about, like production being down. How long does that take to bring up? Because that is still supply off the market, even if you get things moving through the strait. That is a very key piece to the oil market.
Yeah, and it's something that you've been writing about consistently throughout on Substack and talking about here on NinjaTrader Live. So we appreciate that. Tracy, thanks so much. We'll see you later. It is time to bring in TTrades for Tape Talk. This portion of the stream is sponsored by the CME Group, where risk meets opportunity. Good morning, T-Trade. Little bit of a difficult market. I see you all talking in the chat. It's a tough one today.
Yeah, it's just not as clear as the previous weeks, but we can go over it still.
Okay, tell us what you're looking at.
Yeah, so we'll start out with indices and get that over with, and then we can go into a few other markets. But taking a look at indices here, you can see we have been in this downtrend. It's easier seen on YM, but this monthly candle is bearish, right? So I generally expect this to continue until the end of the month. We're nearing the end of the month. April's opening up here. So we have a few more days essentially this week that we can still be bearish until we get a new monthly candle. And with that, I'm looking at kind of one specific level to see if we are bullish or bearish this week. And that's just going to be taking Monday's range or this previous candle here, marking out 50% of that whole candle's range and then looking at it. So doing that, we can go down to something like the hourly chart. And I'm just looking to see if we can kind of hold this level in here or if we fail that level. And so refining that down for indices, I would just be looking at this London low essentially and seeing if we get a reaction there or if we fall through that level. I want to see price reach into this point on one of the assets. It looks like YM would be the first to reach into there. So looking for YM to trade into this level. And then I just want to see if YM forms a reversal here. If YM forms a reversal, then I can be looking for NASDAQ and the S&P to trade higher. If YM doesn't form a reversal here, then I'd be looking for ES and NQ to trade lower into that level and potentially into previous day low. And then we can have a bearish day or bearish next days. So that's kind of it for indices. It's less of I know what's going on and it's more of a reaction game currently just because we had such a large range due to some tweets and whatnot, but 1,000 points yesterday.
That's a nice way to put it, TJ. Just a couple of tweets.
Yeah, exactly. So we had a very large range yesterday, so it's very possible also, when we have a super large range like this, that today we get a smaller range or this range doesn't leave the previous day's range, and that can be some consolidation. So I tend to be a little bit more careful on days like this, following a very large range that has a lack of follow through, right? It's a difference between a large range that closes into the highs and we can get a continuation versus a large range that is kind of, lacking one-sided direction. So indices is less of I know what's going on and more of I'm just going to be reacting and looking for YM to trade into this London low and see how it reacts there. Because that's really all I can anticipate currently. So let's get into something like oil because it is, a little bit interesting. Just looking at it here, right? We still have a bullish month, so I am bullish into the end of the month. And that's just a very easy way to align yourself with a higher time frame. What color is the monthly candle? Well, in this case, it's green, so I favor trading higher. Now, if you notice here, we have this big consolidation, and then we have a nice move against that. So for me, I'm viewing this as more of a fake move, and I want to see this trade back higher. We'll see if the price action confirms that, but I'd like to see, I'm still bullish on energy, so I'd want to see this continue into these highs, this week. So that would be it for oil. Not sure if that aligns with what you guys were speaking about, but that is my analysis. And then we can hop into gold and silver, which got a very nice and large drop, in the end of last week and beginning of this week, we had a very large day. And then we have a large day that closes back up. So if you take a look at silver, it's a bit cleaner. But taking a look at that, it's kind of the same thing of if we are going to continue higher here or back into the range on silver, silver is my focus. It's a bit stronger than gold. You can see gold has more weakness. But if that is the case, then I'm just going to be looking for 50% of this previous candle here. And I want to see that area be respected. So down here on the hourly chart, do we respect that area? We open, we trade lower into here. And so now we're not really getting much follow through, but if we're going to respect this area right here, this little gap, then I can see oil still trade into that previous day, not oil, silver trade into this previous day high. So a little bit less of a higher time frame analysis and more of a reaction game today. Just kind of with everything, just due to the large range yesterday and what price is looking like to me. But with silver, I would just see if we can still trade into this previous day high, looking for that out of this gap in here. And there's a question about London low. And for London, I just consider kind of the overnight session from, after Asia. So yes, normally London is from 2 on, but I'd still consider this a London low. It's just a low that happened right before London. So not too complex there.
Yeah.
So there's gold, silver, oil, and then we can get into the dollar. And like I said, it becomes a bit more difficult when we have a large range or a lot of news prior. So you can see we have this large range. And normally I would be quite bearish on this, but our reaction to this low here is kind of telling me that it's a little bit choppy. So if we go down to the lower time frames, right in here, the reaction at this low is not really what I like to see, but I would still be favoring to the downside in this area. So as long as we keep this high right here, let me just mark this out. As long as we remain with this high intact, so basically that 1 a.m. high again, I'm still going to be favoring to the downside on dollar for today. And with that, that would be bullish on foreign currencies. So that's kind of it, unless anyone in the chat wants me to
I
go
think,
over anything specific.
yeah, I think Charles, this is more of a sort of logistics question maybe, but Charles
Mhm.
asking, I'd like to know what the indicator is that puts the HTF candles on the right side of the main chart along with normal candles.
Yeah, so that's just my indicator, TTFM Pro. And really what that does is just marks out my model. So I can give you a quick explanation of my model as well. Is it generally just focus on the higher time frame candle where the price sweeps out its previous candle. So if this is a candle, price sweeps it out and then it closes back inside. So considering that a reversal candle, I check the lower time frames for a change in the state of delivery, which is from this high, this series of up close candles, how we close through that. And then at that rate, then I use 50% or the EQ of a previous candle. And that's the area I look for it to respect. So you can see that on dollar here. If we go to something like silver, it'll be kind of the same, but this one, you'll mark it out right there. So this little green box, this is where I'm looking for a reaction, right? And so oil, I'm looking for, in this case, mechanically, it would be a bearish reaction. Dollar would be a bearish reaction, right? So that's really what it does, is it just kind of allows me to analyze quicker because it just marks out all the mechanical parts for me.
Everyone wants to know your process, and you are most welcome, Charles, for asking that. Dare we look at cocoa TTrades? I know that
I
someone
guess
asked that question in the
we can
chat.
we can
The
look at ZB
outlier.
first. So some people were asking about ZB first,
Yes,
so
they were.
we'll
Yes.
talk about that. And so it's the same thing, right? We take a look at the monthly candle, and this is mainly what I do is I want to align myself with the higher time frame. So taking a look at the monthly candle, I think it'd be pretty objective to say that this is a bearish candle as we are, down almost 6% from the open of the month. And so with that, I don't try to catch bottoms, right? I don't like to catch those knives. And so with that, I'm still going to be looking for this to continue, like I said, with most things towards April. So into the monthly close. And that's because if you go look at these big candles that are expansion or prices expanding, they usually close in the high or the low. So take a look at last month. Where do we close? Right into the highs. So I'd be looking for this to continue towards the end of the month. So with ZB here, I'd just be looking for a continuation lower this week. So let's go take a look at cocoa.
We got some cocoa lovers in the chat.
Yeah, I've never looked at cocoa, so it'll be fun. Yeah, so that looks like it's just dying.
Yeah.
I mean, so the only thing I could do here is just, you can see this is where my model would actually form, and those are the areas that I'm looking for price to react to go lower. This doesn't really have my model here, but if I was looking for something, it would just be a continuation of this previous monthly range. So we have the high of the month, low of the month. I'm viewing this as a retracement. So then I would just be looking for cocoa to trade back into this previous month's low. Because for me, I don't like to catch lows. I always just see continuations. So when I look at this chart, well, it's obviously trending lower. So why would I try to catch a low? If I'm going to try to catch a low, it's going to be at the beginning of the month. But I would just be seeking a continuation lower. What does that look like? I don't really have much analysis on this because this is not something I would trade on an intraday time frame based off of what the daily chart looks like. I would have to go up a little bit higher and trade this on a weekly, maybe a 4-hour chart, looking at that. And you can see currently my model does not exist. It was only bullish into here. So I would have to wait for my model to appear, which is kind of the same thing of probably would be like sweeping out this high and then having a V-shaped reversal and then looking lower. So that's it on fresh cut cocoa.
I love it. Off the cuff. Look at cocoa.
Yeah.
T, you've got a lot of fans here clamoring for your camera on and you to sort of to jump in.
Maybe one day. We'll talk about Bitcoin first.
Okay, talk about Bitcoin.
But same thing with Bitcoin. We spoke about this last week where on Tuesday here, and this is a good explanation of my model, is if we could get a closure back below previous day high and into this range, I'd be looking for Bitcoin back where? Back into these lows, right? And that's what we were talking about. So we can take a look at this on the lower time frame as well. You know, we have this closure, and we'll just rewind it so you guys can see what I'm looking at here. It's less interesting now, but when we rewind it, you can see we have previous day high, swept out, it closes back below, and most importantly, back in below this previous range we swept out. With that, we have a closure through the series of up close candles, and then it just prints out these gray box. And this is where I'm looking for price to react, because this is where I want to see the upper wick form. So there we get a move lower, and the next day, you know, a little larger box because we have a larger range, but looking for their reaction there. So taking a look at all of that, let's go back to current price action. That's just a review of last week. It's not that great, right? We have a right here, we're just back in the middle of this range. So I'm not interested at trading the middles of the range. And what do I mean by a range is if you take a look, we are in this range. Basically, we've tried to exit this range. We fall back into the range. Then we have a new range because now we have a new high. We try to exit that range. We fall back in. We're right at the middle of this range again. I prefer to be looking at the edges of the range, trading back in versus the middle of the range, trading back out. Because when you're in the middle, you're trying to pick which direction you're trying to trade. So
Fantastic.
Bitcoin, I don't really have much to talk about. We could be looking, you know, short term for a continuation into previous day high here. And with that, what would it look like? Well, it's kind of on there. We're looking for this green box, or essentially the upper half of this previous candle to react, which it currently has. I would be looking for price to trade into this low and then react there to trade back up into previous day high. But once again, currently the markets for me aren't that clear. So I'm more so focused on reaction versus anticipation. And with that, just being more cautious and waiting for new daily candles to tell me.
Yeah, that seems to be the theme of the day. T-Trade, appreciate you. Thank you so much.
Yeah, thanks for having me on.
All right, everyone. As we heard, uncertain, a little skepticism out there. Everything's feeling a little heavy, and some people, quite frankly, don't know what to do. So let's find out what's going to happen. We've got Trade the Open with Merritt, Black, and Chris. Hello, gentlemen. How are you feeling? Either of you feel more convicted than the vibe we've been picking up so far?
Absolutely.
Hi, Maggie.
Hey.
Morning.
Good morning.
Morning,
Merritt,
Chris.
you're coming out swinging.
You know, another day, another lack of certainty, right? I just it kills me a little bit inside every time I hear people say, you know, there's a lot of uncertainty right now. It's like, my goodness, people, when do you have certainty? Let me know. I'd love to hear that.
That's true. With uncertainty comes opportunity, I suppose. Chris, I see you smiling.
I'm just thinking of jokes to come at with Merritt.
Well, in
Here
that
we
case,
go.
let me clear out of the way and let you two at it. Have a great day, everybody.
You too, Maggie.
All right. Take care, Maggie.
What's up, my brother?
What's up? What's up?
What's up? What's up? What's up? What's up? What's up?
Yo, what's the vibe gonna be for Miami? You're gonna let that beard grow out?
You know, I really want to shave it. I'm kind of tired of it. But it's like I've just told myself, I made a deal that I would keep it through the end of turkey season, and so that's what I'm gonna do.
All right. Wait, end of turkey season. When is that?
My mic literally just fell down. I gotta fix it. You hear that?
When is end of turkey season, guys? I thought that was around Thanksgiving. It's March. Is he hunting turkeys? Morning, chat. How's everybody doing? All right. Well, while we wait for him to be ready, I guess I'll go ahead and do my morning plan here. So we had a pretty big reversal Monday morning-ish, right? We bounced, you know, it's an important level here in NQ where we bounce into. I mean, I was ready there to short. I caught a good short We bounced all the way into, I know I have a lot of things here, but let me just take away this, the zones. We bounced all the way back to back test that month-long consolidation right here and just rejected back down. I mean, if you weren't ready to short that, the first back test after the breakdown, I would suggest to go back and review, because that was an A+ location to look for the opposite. So we rejected from there, and we had pulled back to seek a higher low, right? Every time you get this big aggressive candle, you always want to say, okay, what does the higher low look like? You have your big push, your higher high, and your higher low. What could it be into? So I highlighted this February low area as an area that we could get the higher low. We have gotten it. We did get an initial bounce, and it's been rejected so far, and we are consolidating on the 4 hour. Same thing with ES. We moved up all the way to 6750s. We came back down to 6590s and bounced and consolidated. So the 4 hour is in a consolidation, getting ready for a move. Now let's go over my morning plan. So here's the hourly in NQ. The internal structure of that 4 hour consolidation is a 1 hour wedge. You can see that we are attempting to break down. So there's a chance that if we can hold this London low, maybe dip down to 200. I will say we are below the daily 9MA, so there is a sort of downward bias. But you need these levels to break first to give you a little bit more clarity, at least for me. If we're attempting to break down here, if we get some follow through and go to 200, can we hold here? Can we reverse back up? And then that can start a sequence of forming acceptance and move back up. If not, and we hold the 200 area, meaning we fail to bounce like we did here earlier, right? We're coming back down. Can we create a higher low, bounce, and go up? Or is the bounce a shallow bounce, moves up, gets rejected, and that's how you know that we will see follow through on this breakdown. Of course, we need to lose this London low, but if 200 is lost, then I don't see why we can't come back down here all the way to 24,000 to seek a deeper higher low. At that point, we would be in an hourly 9MA lower high, a lower low, lower high downtrend, and to see if this 24,000 can hold in reverse. If not, we go down to prior week low, 23,880s here for NQ. For ES, a little bit of the same. We are in a hourly wedge breakdown attempt. And so we are moving into the 6593 area. There is a scenario here that we can hold. If we don't and we form a little bit of acceptance, we can see that move lower into 6543 to seek a deeper higher low bounce. If not, we move down to prior week low and the 6518 area. So I will be looking to align with this breakdown here if we cannot recover on a bounce.
My goodness.
Back on?
Oh, yeah. The desk clamp just came loose, and so the arm just fell in my lap. We're good. No one's ever called me streamer boy before. I don't have it together. I don't have it together, chat. Good morning, chat.
Thanks, Kat. Morning Fiber, Wit, Fractal.
Market getting a little squirrely here. Jumping around a little. I got stopped out of the long that I was in on that move lower.
Hey, Cooper. Hey, stream side. Morning. Man, dude. Yeah, man, dude's in the chat.
Man, dude. Traderson. It's a good name. So, are you bullish or bearish?
I am bearish since I keep it pretty simple. If we're below the daily 9MA, sellers have control. If we're above it, buyers have control. Pretty simple. So can we enter some support and bounce? Yeah. There's a lot of work that buyers would have to do to reclaim resistance levels. Look at that beautiful breakdown.
Mm-hmm.
Man, this is a solid wedge here, guys, that I missed. Solid wedge breakdown. Look at that right there. You enter your short, your stop into 3R. I gotta finish. What about you? What are you?
I'm getting long. I like where we're at for the week. This market is long-term bearish.
Long term? What do you mean by long term? Like
You
my
know, like swing time frame, like multi-day
that's
holds, like longer. This market is, I don't know what the technical definition of a bear market is. Is that what is that? The 200
down
day or a certain
20%.
retracement? Or
No,
I don't know if we're in a bear market, but I was talking with guys yesterday, like that high yesterday was a great spot for short risk. If you want to be short, swing short, longer term short. As I've, what have I been talking about, chat? Every time I come on this show, it's that yearly prior value in the S&P 68.18, 68.19. That's the line in the sand, kind of for me for the year right now. And then we're imbalanced down for the developing value for the year. And that is now just around 6,800. And so that 6,800 to 6,820, I've been saying for a month, that's the line in the sand. And so, you're able to keep it simple with an EMA, bullish above, bearish below. I've got like a confluent zone that comes from a couple of time frames, and it's bullish above, bearish below. However, my short-term trading, my scalping and whatnot, the order flow type trading is, I don't always have to align with that big picture bias. If it was a swing trade, I would be shorts only. But as we see now, I'm currently long off this low.
Yeah, so
We are
we're building
rotational for the
out.
week.
We're just consolidating. So we're building
Yeah.
out those boundaries that
Yes.
your kind of long would work well because we're building that out. You're getting in before people see, oh, we are consolidating. You're able to identify those areas very well.
And if we, I think the volume profile for the week and for last week, if I bring this chart over, this does a really good job. I know this might seem a little messy and some people don't know how to read these things, but there's really two main distributions from last week, two main areas of consolidation, and that would be this guy, right? This distribution, which is what we spiked into and rejected on the initial Sunday night news or Monday, whatever it was. And then you have this. There's really nice LVNs here on this one. It's not as clean, but in general, you have this distribution. I'll draw it. Upper edge here, lower edge there, right? And so there's my trade, right? Why am I getting long right now? Well, to me, we looked below Sunday night, coming into Monday morning. Whoop, we failed to hold up into this upper region, right? We were unable to do so. And so we're rotational in this lower distribution from last week. And what have we done? Now we're kind of bottoming off the lower edge. Just like TTrades said, just like I say every week, my edge comes from the edges. So I'm placing a trade from the edge, even though I'm long-term bearish. And that's all I have to say about that.
I think it's important for others to know and learn that even though as you say, the longer term look is bearish, yes, but there's still a sequence of events that need to happen for prices then move into the next stage of lowering prices. And that's, we get a move, we then consolidate that move. And as through we get that consolidation, that's where you're able to pick up at those edges. And then that's a good scalp for you. And then as the build out continues, and then we continue the longer term move lower, hey, well, it's a repeatable process and you can get in there in bullish
if we
trades.
break below that weekly balance and retest it, with the acceptance below and retest it from below, then it's a great scalp short that aligns with the higher time frame picture. So just taking what's given, I think, is important, and having a process for being able to take some shorter term stuff. You do that as well, right?
Yeah.
You have some times where you'll get a little aggressive and go against the general bias and things like that. It's a very dangerous thing for newer traders, because if you give yourself permission to go against your bias and your real plans, now all of a sudden it's like you have no discipline. You can just take any trade you want, and that, trust me, takes one to know one, leads to a lot of problems in your trading. So you have to kind of earn the right to allow yourself to, whether you want to look at it as multiple strategies that you interweave, or just areas where you're allowed to bend or break some rules. It's a very slippery slope. So just be careful, newer traders. I like the look of this low. I like that we swept the overnight low. I like the buying on the delta we're seeing. But who knows? We got 14 minutes till the open here. We could easily do another sweep lower or anything. I like my trade location. I've secured a good trade location.
If we reclaim this recent breakdown around 65.98 area, then I think your trade will be protected, and we'll be seeing like an hourly fill breakdown, and that's like the best kind of entry. You have identify such a lower time frame entry, and then you leverage that with a higher time frame reversal, and
maybe
that's
an ad or something. We'll see.
Yeah, you risk one, make 20. That's insane.
Savas is asking about benchmarking expectations, performance. What is typical performance for junior traders on the desk? It just doesn't exist. I hate to say it, but what really, really, really does exist, guys, is overinflated retail trader expectations for the type of rates of return that you should be or could be making. I always like to talk about Jim Simon's Medallion Fund, the best track record that is essentially in history. It was like 67% a year or something like that. So they weren't, but if you're risking 1%, we're talking about 67R. We're talking about 5 something R per month. I don't know many retail traders who come to me and step under my wing on the desk or whatever, who are thinking that if they can make around 5R a month, that they are in the cream of the crop. Nobody thinks that. They want to make 10R a month. They want to make 20R a month. You got to tamper those expectations. That is one of the most appropriate responses I could give you. Price able to drift lower here back towards my entry on no delta whatsoever. A little bit of a liquidity vacuum. Yeah, the fact that he did it at the size that he did it at is the real deal. That's what makes him the big dog. Big dog. We don't have enough time to talk about my strategy for taking profit. It's very discretionary, and it is very. I have multiple styles that I'll deploy depending on the situation and the context, and whether it's an intraday position trade, whether it's a scalp. Typically, just to give you some type of answer, I like to scale some out on a decent rotation, a decent kind of zigzag move. Didn't quite get there. I was being a little stingy with this. I would have liked to have scaled just above 6,600 there. So I like to initially scale some. And then from there, it just depends on the situation. Do I have intermediate targets? Is this a rotational mean reversion style play, or is it a trending play? How I handle that is different. And then am I going to leave a core position on or not, depending on the context? And if so, I'll have rules and different things of doing that. So there's a lot to it. The key thing with trade management, guys, is that it just simply will never be, with the benefit of hindsight, perfect. A lot of traders continue to search for and search for and search for perfect trade management with the benefit of hindsight. They do not want and do not like and do not enjoy when they take profits and it keeps going. They don't like when they say, well, last time I took profits and it kept going, so this time I'm not going to take profits because I don't want to feel that pain and discomfort that I felt last time. And then it comes roaring back and stops them out. And they say, well, I should have taken profits. That is retail trader trade management. You're just spinning in circles, a dog chasing their tail. You have to make a choice for trade management. What kind of trader do you want to be? What does the current situation call for if you allow some flexibility with trade management? And repeat it over and over and over. Capture what you want to capture and let go of whatever happens with the rest. We're never going to be perfect in terms of trade management.
I think we all show that well here on the streams. You see us show up every week, and we're just doing the same thing over and over again. And for some of you, it might look too simple, maybe boring, but we repeat the same process for a reason. We're not chasing points. We're not chasing moves. Hey, we identified this area. We executed here. We then applied our entry parameters, exit parameters, and that's repeatable. And I hear from you guys, oh, it was FOMO. Oh, I wanted to make up for my earlier losses. Well, at that point, you're no longer trading what's in the chart. You're trading everything else outside of the chart.
Yeah.
And that's the big disconnect. And there's a lot of work that goes behind that. And just don't understand your strategy well, or don't really have one, and don't never put in the work to understand the actual entry and stop rules, what those create in a historical review or back testing. And so you're moving things based on the momentum for that day, thinking you're going to see more in the action, instead of just saying, hey, well, I hit my area and I took it, and it went without me. Cool, no problem. Let's do it again tomorrow.
Eric had a good comment. I mostly agree with. I think that if you set those stops and targets based on market generated information instead of just fixed, like I always set an 8-point stop in the yes and always set a 15-point target. Don't do that. Set them based on where they should be, based on back-tasted data or based on swing points or whatever variables or indicators or tools you use. So set them dynamically where they should be for where the idea is wrong and where the target should be. But then, yes, for newer traders, it really is best to flex that muscle and build those reps of setting a stop in the target and then forcing yourself to take your hands off the wheel, forcing yourself, no matter how much you want to intervene, no matter how much your internal dialogue and fears and everything is sounding alarm bells, getting repetitions of denying that, right? That's discipline, of being aware of it. That's self-awareness, right? Forcing repetitions of those things is really, really good as you're starting out. Earn the right over time. I say this every week. Earn the right to be more and more discretionary in your trading. Earn it. Don't just start that way. 5 minutes till the open.
Holding here so far. So this is that first area of support that in my plan is where we can hold. And if we hold, we trigger a failed breakdown from this hourly consolidation breakdown attempt. So if we are able to hold here and reverse, like we're attempting now, then we can traverse all the way back up to the recent overnight highs. What is that, 420s, 430s? No. 500 in NQ. We do have to reclaim this 340s area. ES would have to reclaim 6618 to then get back into 6640s, 6650s. But it's here. This is here's those hourly charts again. Now I have them on the 15-minute, but this is your breakdown attempt from these black lines, these wedges. So this is where you guys hear me always talk about how this is the first lower low. We're bouncing to create the lower high. So if we are able to hold here and reclaim the lower high and reverse, that triggers the reversal. If not, then we continue lower. So for how I trade the markets, it's a very simple view of, hey, can we reclaim? I mean, another way to look at it is, can we reclaim London low or not? If we can, then we have a failed breakdown. If not, we continue lower. But we are below the daily 9 MA, and no, you are, Chris. Yeah, and
he's a trader's trader.
The best thing that that Merritt just said in his comments here is that your stop should go, and I think that's most important that people maybe need to understand. Your stop goes where it's invalidated. It's no longer valid, not at the 8-point stop, or like you said, you have to earn to be able to be discretionary with those rules now. But a lot of people say, I keep having an 8-point stop or an NQ, a 15-point stop, but you're not really understanding the structure that you're trading, the higher time frame context. So your stop is going to get ran over many times. You have to identify an area where your stop, it will invalidate that idea, and that will help you the most. Like Merritt and I have our stops on reverses in the same at below the lows or above the highs, because he knows that if that is broken, then his idea is invalidated. Or moving your stop up. Well, how do you know that's the right place to move it to? What if we get a pullback, it stops you out, but the stop at the lows was never taken out, and then an hour later, price is significantly higher?
very style dependent, right? If you're like trading short-term momentum and you demand that momentum persists once you identify it, then by all means you should probably have some type of aggressive trailing component in your stop. If you're taking a mean reversion extreme, you definitely don't want to aggressively move that stop up into that area once it starts to reverse, because it's very prone, by the nature of the way markets move during a rotational, consolidation. There's more back and forth, so you can't trail the stop into that as aggressively. So make sure that you learn how to fit the trade management to the strategy style and things like that. That's important. All right, here we go.
Thank you. A bit stronger. And it's gone.
Yeah. Same plan as before. I'll look to scale some if we can kind of break these recent little swing highs.
Tempting to hold here. Some negotiation going on. Oh, there it is.
Yeah.
So NQ just is doing a much better job at reclaiming the prior breakdown from 8:30 to 9. So we could be triggering a failed breakdown here versus the hourly wedge breakdown that I talked about.
Scaled some more here on the fact that the buyers are not showing me what I would like on the tape. Kind of a what I call a reluctant scale out.
Use our into prior day low. SPY is way below it. So a successful hold of London low here at 295, 297 in NQ would be able to push price higher. For ES would be this 660305 area. And see if it can succeed.
Pabloshi is asking about, what's appropriate, combining the data provided by each order flow indicator to make an entry, question mark. It gives you many entries throughout the day. This reminds me of something I think is super important. Order flow. Let's use an analogy. if you are going like I did, I just got back from a vacation last week to the beach. If I'm driving, 6 hours to the beach, I need a big picture map, right? Of like what interstates to take, what side roads to get off on once I get off the interstate. Like big picture context and view of how to do. All of that would be like your main contextual reads on the market. Like for me, it's the that weekly volume profile that I showed you and those distributions this morning, and why I'm looking for an entry from where I was today. Order flow is like once you get off on a side road and there's a stop sign or a traffic light that turns from green to red. It is a temporary, fleeting thing that needs to be respected if it's a tool you're using. But that's all it is, and that's all it will ever be and can ever be. It does not change the bearing of the trip. If we're headed south, it doesn't change that, but it does change maybe a little stop and go and things like that. That's the best analogy that I have for, as someone said, it gives you many entries throughout the day. Yeah, if you just listen to order flow, it tells you a million fleeting little things all day long. But it's very important to always place order flow within a context. I think there are some folks out there who get into order flow and they think that it's just going to be the answer. It's just going to be all they need. I don't have all the answers myself. Maybe that can be done. I've not really seen it from track records or data that I've been privy to. A lot of selling hitting the tape here. The first bit of selling we've seen since that capitulatory type low that I got long from.
Yeah, we just back tested the wedge breakdown on the hourly, rejected. In
Take
a
a look at
range
gold.
here.
Gold is fairly quiet, range bound in between, plus and minus 1 standard deviation from VWAP for the session. Not a lot of clean momentum to it currently. Crude oil. It's trading really, really nicely, guys. Crude oil is a nice, clean market to trade right now. If things dry up in the S&P, I might flip over to it.
So far, this bounce attempt is not having any follow through higher. We just back tested the breakdown on the hourly. We rejected pretty hard from it. Rejected London slow as well. So there's some back and forth here now. Maybe it needs a little bit more time to tell us if it'll want to bounce back and reclaim that area, and then we can traverse all the way back up to London's high, or this becomes a acceptance down here of 65.90s in ES and 200, 240 in NQ, and then we move lower.
My mindset here in this trade is we've just had the open. We've got a number coming out. I've done my job. I've secured a good trade location. I've paid myself as the market made profits available to me, as Mark Douglas teaches us, and taught us, RIP. And I have no idea what's going to happen next. I have not the slightest clue. Either we're going to hold the excess low, and this trade's going to, core position is going to work out brilliantly, or we're going to make a run at those lows, and that's where my stop is now, just inside of them, because I don't want to be the one getting wicked below them. So that's the mindset. And I think it's important to shift your mindset. I was talking with a trader yesterday. Once you get scaled and you're into a core position that you're going to hold, you have to have that mindset shift. You have to try to forget you have the trade on, and can be a helpful thing.
Stop filled.
Flat here.
Into 200 for NQ. Now let's see how a bounce looks in here. If we can reject, create a lower high, and then a breakdown attempt. But if we go straight down, then I don't have a setup here.
I'm surprised it even stalled here in the mid 80s instead of flushing. There it is. So that's the stop I didn't want to take, right? So I initially had the stop at the lows, but then based on the way these candles continue to stack in these lows around the same price, right, around 83.75, I put my stop in front of there so that I could just stand aside and not be a part of the flush down to 80.
You think last week's low holds? Or Sunday's low? Was it Sunday's low?
Acceptance for me is unchanged. We would have to rotate quite a bit lower, maybe down into like the 60s for me to start to get bearish against that weekly level that I'm leaning on. So for now, it's more of a market that's still trying to just find a low.
Look at that, straight down.
Mm-hmm. Nice little law 10 compression into the low.
Order filled.
Hopping back in here.
Don't know if we'll see a lot of follow through lower. We're still quite oversold.
Order canceled.
Scaling.
Turn my cap around. Does that help you make more money? How long is acceptance?
Need the rally cap.
Yeah.
Close to DLL.
Dang, so acceptance for me is a pattern, and that pattern can form, probably like around an hour, tops maybe like an hour and a half. But that's usually a 5-minute wedge for me that confirms acceptance of a zone. But it's a structure that I'm looking for. It was a solid rejection from the hourly back test. Let's see if there's follow through though. Some consolidation here would take us significantly lower. If not, we can trigger a fill breakdown. And this could be a deep higher low for Sunday's open, or low, or Monday low.
There's the number.
See what happens here. We're into the first lower low, lower high of this recent breakdown. If we reclaim it, then we can move back up. If not, and we form a little bit of acceptance, hold here, wedge up, then that'll give us some more information for lower prices. I just think we see lower. Yeah, we need acceptance down here.
Order canceled.
Scale some more there into the developing value area low in case we develop an imbalance down.
Do we hold it first? And how does that look?
Merritt, will you wait for bars to close to enter, or will you enter intra bar? Yeah, when I'm trading, and that's the reason why I have my bars that look like they do, kind of scrunched up, high low close, can't really tell where the open and close are of them for the most part. I'm not seeing bars open and close. I'm seeing rotations, and I'm seeing, therefore momentum, and I'm purely looking at that. I've zero regard for whether a bar is just formed or about to close or whatever.
All right, we have our first lower low, lower high put in. At the 200 zone. ES is below the 65.90 zone, so it's weaker. So either we hold this area and can start to bounce, or we
sellers.
Stop fill.
Downtrend. Great scale outs. Flat again. Fantastic timing here, picking really, really good spots for if there is that reversal, but not to be so far. Haven't been right yet, and we're profitable on the session. That's good trade management, good protective scales.
Yeah, that's major key. Major, major, major. Yesterday's open was good. What do you mean, liquid? It was very tradable. That was an active morning sesh.
Thanks, Crudele.
Looks like I'll just wait for the news. I don't have anything here. Neri, I am looking for a support to come in is around 24,000 or into prior week low. If we do continue lower for ES, that would be around 65.43. So far, we are seeing follow through from that hourly wedge breakdown. Yes, bounced into 93 and rejected. We'll have to reclaim that to see higher. NQ would have to reclaim 220s, 230s to see higher. If not, then sideways to lower.
Ooh, crude and gold are not trading better than the S&P. A lot of what we call bar to bar overlap. Up, down, up, down, up, down, up, down, up, down, up, down. Could be a decent trade location though. Weekly VWAP. Sellers certainly not scary on the tape.
So Q's just closed the gap from Friday to Monday. We have divergence here between ES and NQ and RSI divergence. I do like it.
Yep, gold finding some buyers off the low there.
Bearish IB so far.
Connection lost.
See if the lows hold on these divergences as Qs just move
No chance.
into Friday's close and close the gap. You didn't think it'll hold?
I don't think so, but what do I know? I've shifted to kind of hands off here based on how this is unfolding. After picking some really good, turning points on bottoms, I'm just not interested in at this point. Delta's holding positive on the session, but we are in a clear imbalance down, and we continue to almost form what I think of as like a compression type of pattern. So like initially it was this, and we start pressing in like, however you want to look at it, but like this. And so that cracks, but then they did kind of a crappy job. And now it's almost like we're reforming one on like a smaller basis, like this. So to me, those just are signifying a lack of good lows. It just continues to kind of compress into the lows instead of giving good excess. But again, bullish tape. So to me, if I see something change, a push back up to 6,600, then I can look for pullbacks to start reinitiating. Are you long?
Yeah, I
In
took
Q?
a long. I know you don't like it, but I am looking for a higher low against.
I wish I could be long. I love it. Is the low any better in Q?
I just trade NQ mostly.
I'm saying, is the low any better?
Yeah, versus ES.
Yeah,
Not
a little bit. At
necessarily.
least the last leg, one ticked or two ticked or three ticked the low. Good
Oh
timing.
yeah, it is better in a way that I mean it did made a new low versus ES.
Right, it did not. Yeah.
Yeah, so I consider that as indication for a reversal. We did also put in an RSI divergence, which it sounds like a Delhi's boomer bands when I talk about RSI here. But we also had a lower low, lower high on the 2-minute downtrend. So all these met my rules for a reversal. And we'll just see if there's follow through higher now. On the 15-minute, we're also on the second lower low, lower high. I mean, still a bearish tape. So we'll see if it works or not. But I think that was a good area based on everything that I saw. And then this is the attempt to try and reclaim 200 for NQ. If so, it can push out 230s next. But if it'll be just sticky here, then what this will become is acceptance. We'll just go through a little bit of chop and then continue lower. The Q's also closed the gap. I mean, there's just so many things that lined up there. This is the bounce now on the Qs to seek a lower high. So here's QQQ. You can see this, if you guys see this green shaded range, this is the gap. We just closed it or tagged the bottom of it, right? Where's my drawing? Right here. Hello? I don't know why I can't select my drawing tool. We tagged it, we closed it, we had an RSI divergence, we had an SMT with ES. We had a low to now get a bounce into the 5-minute 9 MA. You guys know that X, Y, and I look for that. So
Whoosh.
all right, there it is. Oh, no, it's not gonna fill me, huh? It's not gonna fill me. Wow. That, you know, that's happened 2 times already with XY. One time, the high was 0.25 away from my partial and then completely rejected back down. All right, took some off at 1R. We did reclaim that 200 zone that I talked about. ES, remember the ES was back testing 93 zone, 92, 93, rejected. So we're attempting a reclaim here now to see if we can hold and traverse back up into what I would say is the morning highs in E and Q, 311, and then test 340s zone. If we make new lows, then this idea is invalidated. But I paid for my risk, so I can go into like automatic mode and just not care about it anymore.
The mental shift.
Yeah, I mean, I showed you guys the gap fill. I don't know what Nick would say to this, but we literally tested the close of Friday in the Qs. We had multiple divergences there. The 15-minute was oversold. The 2-minute and the 15-minute and the 5-minute had trend completions based on what I track. You guys know I track the lower low, lower high sequence. You have a lower low, lower high, lower low, and then reversal. Now, it can fail here, but you know, I financed my risk and don't need to worry about it. Now, if it starts to form acceptance here, now I have information to tell me, hey, it is ready for a sustainable move lower. And that's what this can turn into. And then at that point, I could say, okay, now I can focus on shorts because I'm looking to capture trends, right? And this can be me being in for an hour, 2 hours long in a trade. So, but I need that sequence of events here. I'll be trading my IB Strat 2 on another account and see how it performs today.
I tried a quick short right there, stepping aside. Just continues to knock on the door. Yeah, Chris, let's hear some of your recommended trading books, especially someone who wants to learn like lower low, lower high type stuff.
You know, I've never found a book that covers trend sequence in the way I follow it. When you learn about lower lows, lower highs, or higher highs, higher lows, what they're focusing on are the swing highs and swing lows of an uptrend, and then the inverse in a downtrend. But in between those, there are multiple higher highs, higher lows that is where your focus should be at, right? If you can be present in that immediate trend, that's how you can do your best in being aligned with it. And I have not seen there's no book that covers that, like the internal structure of a higher time frame trend, and then once again the internal structure of that time frame trend. Like,
So, I mean, are you talking kind of like just multiple time frames? Isn't that kind of what you're saying? Is like, okay, you have a trend on a higher time frame. You're saying you look at the internal lower time frame than the higher time frame swing highs and swing lows. Is that what you're saying?
yes, but there's also other trends inside of that, not just on a smaller time frame, but there's also, like, if we are in a higher time frame uptrend, like, I'm drawing on the chart, and then inside of that, the price action is, let's say this is one of the wedge setups that I trade, right? And you have a consolidation here, and you break out and you have a new higher high, higher low against this breakout, but we're still inside that higher time, not the same time frame. We're still inside that higher high, higher low uptrend. But this immediate trend, this breakout after this consolidation fails, that is a confirmation that I keep saying that the trend in this time frame will fail. And that's what a lot of books don't cover, is how to know how the trend that you're in will fail. What is that turning point? That's something that I focus on.
Failures are the best.
Yeah. But you know what did change everything for me was reading oh gosh, how am I forgetting his book? What's this? And you might have read these, but that's what allowed me to become more systematic was Tharp. There you go. Thanks for reminding me.
Dr.
No,
Van
it
Tharp?
is not that guy. Van Tharp, yeah, Dr. Van Tharp. His systematic way of putting everything together, like, how I brought up how it's a simple, if we're above the daily 9MA, we're in an uptrend, we're below it, etc. I mean, that's just a simple trend filter that if people were to apply it, they could just help them be aligned with the trend so much better. But I think, once you read all those books that you go through and, how to buy, how to sell, what is a stock, all those things, and then you learn how to make it more systematic, and you say, how do
you
you
make it your
define
own? You take bits and pieces from
Yeah.
different things here and there, and you make something that you can really trust in and call your own.
Yeah, so he was like my coach that I just never met in real life, but it's I just, a lot of people need help in understanding, is this my right stop? Well, go back and review that. How does that stop perform over 90 trades or 90 days? What do you need to adjust? What do you need to iterate? Right? Like, it's that process that he teaches really well. How do you get better at determining a turning point? I look at trend structure. So for example, I touched on this just in this trade. 80% of the time, a trend will end when we've reached two higher highs or two lower lows. On this breakdown here, I highlighted that we had one lower low, one lower high. We immediately made a very small new lower low, and then we bounced. Now, you may not see much of that, but to me, that is a complete trend move, because we've completed two lower lows. Now, 20% of the time, we can see a third lower low, but that's more of like the, like what people call a climax top, or a big low in the markets. But because I focus so much on trend structure, this helped me visualize, hey, the trend is ending here. And then I applied my other set of rules, divergences, where we are, location, and then that's what helped me get long, right? But that was a turning point for me, because when the trend is done, you now know that you're going to start a series from lower lows, lower highs, to now higher highs, higher lows, higher highs, which we've seen now on the 2-minute, right? This is a complete trend reversal on the 2-minute. So the turning point is, where do we switch from the sequence of lower lows, lower highs to higher highs, higher lows? And that is when the second lower low in the prior downtrend completes and ends. And then the break of that last lower high is what triggers a complete trend reversal. And that is literally my entry. What did I do to identify my entry? Well, I said, where can I enter where I am now part of the trend that changed, right? From now higher highs, higher lows. Well, the break of the last lower high. And you guys see that was my entry. So I'm entering, my entry setup is the break of the last lower high in a downtrend, because when we reclaim that, we now trigger a series of higher highs, higher lows. If we make a new low, that is invalidated. If not, we do get that series or sequence of higher highs, higher lows. But long answer, but that's a combination of, I've identified that the trend was ending. I applied all these other things that I look at, and then I entered right exactly as the trend changed. All right, so that was a successful reclaim of 93 zone in ES. You can see we broke down from it. We back tested it twice and then reclaimed it. Same for NQ, this 200, 220s area. We broke below, we back tested it, and now we're above it. So as long as we hold now on a potential stronger pullback, then I don't see what we can't push up into 340s, 350s. And that trade is now at 1.5 R. And let me take it a step further, guys, and see how so you guys can see how I combined the multiple timeframes. On the 15-minute, these black lines are the wedges, right? Let me take away the zones. So you have this wedge breakdown, and on the 15-minute, we trigger a lower low, bounce into the 9 MA, lower high, and then that move into the lows was the second lower low. So again, talking about second lower lows completing the trend, I combined the 15-minute reaching an end to its downtrend, the second lower low, with the 2-minute trend completion as well. So I've combined multiple time frames. I was able to leverage that. And with the additional help of these other tools, I was able to find the low. And now we're bouncing into the 9 MA to create the second lower high on the 15-minute. So what happens from here? What can I look for? Well, if we are to continue lower to another new low, we need to reject from here and make a new low. If not, we come down and we create a higher low against the low, which is scenario 1 here that you see. And then we can move up into 340s. So it's really, all I have, I'm just looking at that now is, did we create a higher low now against the low? If not, we move down to make a new low and my trade's invalidated. It's a little bit slower in trading than others that you guys see, especially on the order flow side, because they're able to identify good areas and just get in and out. But I tend to hold, if I capture a good trend, I'll hold for the whole day. And if we're in a big uptrend or big downtrend, I can hold for multiple days with like a 10, 15 point stop. And now I'm in a multiple day uptrend. That's what I'm really trying to capture. But not in the last few months. It's been very range bound. There's lower low coming? Yeah, probably. If we fail to hold 200 now on this back test. I do have a video on X on acceptance. For those who, one of you might, how I view that. Look at that, strong rejection back down. So this is where you now say, okay, is this going to become a higher low into the 200 area? And can we hold? If not, then it goes and makes new lows. And then at that point you say, okay, now this can become acceptance of the lows area. And at that point I can look for, now I have a better idea that a sustainable move lower will come. But we have a pretty tight IB balance so far. I'll be looking to short. So now I want to see this become a higher low. So these are the lows. And now we see if we can form a higher low here and bounce back up. If not, then we go make new lows. But we are still below the daily 9MA. But if this is a, this is a good area for us to have a higher low against the Sunday, Monday low.
This session and this pattern really, really reminds me of our stream from 2 weeks ago on the 10th. We were compressing down into those lows. I was buying dips, and it ended up just like today, putting in lows at that same type of level, a mushy, not a good low, and then it left the region. Reminds me of that.
I took more partials off here on this bounce just to bring down my size. And now I'm happy with seeing if we do hold or we push back down and stop me out on the rest. And then if this bounce idea is invalidated, then now I can look for a breakdown trade. I gotta set up my other. And that was another attempt for ES to try and reclaim and hold London low. And you can see we rejected pretty hard from it. NQ didn't even make it to that. And now we're trying to hold this 200 zone, trying to put in a higher low against the morning low. If we can reclaim the 9MA here in black, this black line, then we confirm that we are holding and we can push back up higher. So far, looking back at the open, we're just consolidating here. The Qs are making a wedge here on the 5-minute. Let me bring this over here. Just consolidating here right under prior day low. So if the Qs can reclaim prior day low, then you know that we are going to shoot up. If not, then we're going to move lower. And then maybe at that point, the Qs want to take out prior week low. But we'll see. So far, the higher low is holding. Bitcoin near the lows, huh?
The Bitcoin.
It's the Bitcoin.
What is that? The NQ daily 9 EMA. So by the way, I'll answer that. Well, actually, I don't have that up. I followed the 9 MA, not the 9 EMA. The 9 MA, we just back tested.
You always say 9 EMA, 9 EMA, 9 EMA, 9
I
EMA.
do not. Don't
You always say
the
9
words.
EMA.
You do not create that word, first of all. Okay?
You always say 9 EMA.
I did not.
You literally say it every week 100 times. 9 EMA, 9 EMA.
Guys, is he making that up? I do not.
Chat, are you with me? Am I wrong?
I think you gotta get those ears checked out. I don't know if age has something to do with it, but
You say EMA. They're gonna put together a collage of you saying 9 EMA literally 170 times.
do it. Production, set that up. I say 50 EMA for the 50.
9 EMA, 9
I say
EMA,
9
9
MA.
EMA.
I don't have the EMA on my charts. Why would I call it that?
I mean, okay, the only logical, maybe you're saying the 90 MA, 90 MA.
Yo, look
90
what
MA.
Fractal said. 9 exponential merit average. That's hilarious.
Oh my goodness. Well, I learned something
show
new
us a
today.
clip.
You don't use the 9 EMA. I learned something new today.
I always see the 9. I do not, guys. I say MA. MA, a quiet E. MA, 9 MA.
Jim Wood says it perfectly. All the time he says 9 EMA, 9 EMA.
9 EMA. Well, the 9 MA is
There it is.
What is it at? 518 on the daily. We just back tested it too on that bounce, or not. It was the session high. So we're attempting to hold here. We did back test the 200. I can't say that. I'm just gonna delete all of them and trade blind. Maybe it's my ESO.
Could be.
Kane says he has video proof of 9 EMA. I just never graduated from that level in ESL, guys, so my M's sound like not E. EM. 9 EMA.
I never thought I would get such a chuckle over an MA versus EMA. I never thought that would happen. Wasn't on my bingo card, but that was funny. I tried to join you on the long there, but that little selling candle, again, it looks like these lows at 91 are not secure, so tough sledding for me here today, trying to trying to be a part of this.
A little bit of a consolidation chop here, but we are wedging up here. I continue to say that on the cues. Look at that beautiful consolidation here. It's going to move here soon. That 200 area is, it's a 190 to 200 zone. So when I say 200, it's not like the exact level, but it's trying to hold here. But, I already paid myself twice, so it looks like it's ready to break down here. Do I want to short this breakdown here?
That's true, Fitz.
All right, close to long, right around break even, because we are getting ready to break down here. And
I would love to see a little sweep below these recent lows.
all right, the IB is about to be set. I'm going to be trading my other account now for a separate IB strategy that I have. If that setup shows up today. Am I looking for longs on a short month?
Oh,
what do you mean by that?
Market. Oh, it's gonna make me chase it here.
Like are you saying if I'm looking for shorts like in February? I don't trade ES much anymore. It's just not. Oh, the entire month has been short. No, yesterday I shorted the highs. I was short. I'll tell you where I shorted.
Nice.
I was short at 657, right as we put in that divergence at IB high. And I rode that all the way down. Because we were bouncing into the daily 9MA and we were back testing that month-long box or range. Oh, look at that. I was wrong in closing it here. It just triggered a little fell breakdown. Why look for longs? Because we're at a support area. I mean, it's the same reason that Merritt was looking for longs.
The old armchair traders.
I mean, I was in a short yesterday. I don't know what do you want me to tell you. I'm trading the action that's in front of me. We're at support and we were holding. My setup appeared. I took it. I will only short support if we form acceptance and break down. But we didn't get that. We instead held and bounced. So why would you get me? I got a short bounces, rallies. Hey, good job, Sil. Take care. Will we be at the London meeting? I don't even know when that is. I don't know. Are you planning on going, Merritt?
Never heard of it. I'll be in Scotland this summer playing some golf.
I mean, Mr. Market, I was short yesterday at the highs. I don't know what you want me to tell you. You're telling me
What
that
more
I
do
would
you
do
want from
better.
him?
You're telling me I would do better if I shorted? Yeah, and I just told you I was yesterday. But what I couldn't short anything here. We're in a range. I bought the lows, sold near the highs, and now we're range bound. All right, the IB set. I have a separate IB strategy where I'll be looking to see if we break down and then bounce, and on that bounce short. So, and I'll show that account here as well, but it'll be a separate one. I mean, this is very weak action against the 200 zone. We are wedging up. But so far holding. I'm interested in putting the long back on again. ES is
I
doing a
tried
much
it. It
better
looked good there for a
job.
minute, and then it's just back into this little consolidations. I didn't want any more part of it. I don't like trading from the middle of developing value like that. So
Yeah.
be quick. I'll be quick to step aside.
We have a little bit of a double contraction here. We're inside the 1028 candle, two inside candles. So this is getting ready for a move here. I'm gonna look to trade this here. We break down.
This is a little no touchy little area here now.
Yeah, I'm looking to short this if we break down.
Mm.
But I also like we're holding that 200 zone, so I also like the man. ES is a little bit stronger. What's going on? Cyclical is strong. Yeah, financials.
Mateus, my take on the euro right now would be full on bear mode against the current highs of this week. 68.60.
Oh no. Okay, so this might want to push up.
It could wick them. You have to leave room for that. It could wick them up into 69.50. So just that general region there is bearish. If we start to hold above that region, very bullish.
Action's getting very tight here.
What'd you say?
Action's just getting very tight.
Yeah. This has been a very non-conducive market for my kind of favorite price action patterns to trigger into entries with little stop runs and stuff. It's just continued to put in multiple lows in the same region, and not take them out nicely to give those, spring pattern entries and stuff like that. So here the past half hour or so, I've taken a couple of subpar entries, trying to make an exception and get involved, and hasn't paid off.
I tried it here too, and I just took it off. I'm gonna give it more time.
Is this the short?
So I need 40 contracts. We're just range bound here. Chop mode activated.
Mm-hmm.
NQ is right below the 50% of the IB. ES is right near the highs, right under it. So some divergence here.
So crude oil up into weekly VWAP. That's where we kind of started to get stalling. We talked about, pre-market, how clean it was trading, and then it started to get a bit choppy. Are we going to reject VWAP? Now we're making a push at the high. So it's an interesting point. If crude is going to be able to continue to push back some of these recent highs, puts 95.60 on the table. That's funny to say. We're trading at 92. Usually a move like this would be, an 80-cent target or something, not a $4, $3 target. Slightly elevated volatility.
We have a double inside candle on the 15-minute in NQ and ES. Just keeps getting tighter and tighter.
Do it like a tiger.
ES is doing much better than NQ here.
Run them. Push.
Buy is also right under prior day low. It's acting very well versus NQ.
Got coffee and coffee and OJ making some big pushes higher.
That's what you were saying. That was your drink right now. It's coffee and OJ. And Jesus.
little half and half coffee and OJ.
We like some milk. What kind of milk for your coffee, sir? Oh no, OJ, please.
Brother,
what? It's the Merritt Black Special.
I've got like a little mixer. I like shake it up. You want that iced or hot? Which would be worse? Coffee and OJ half and half, iced or hot? These are the topics of conversation that come up when markets get this choppy.
Ice or hot? What? The coffee?
No, the Koj.
The Koj. Yes, is going for it. NQ can follow here. That was a fell breakdown. Tiny fell breakdown here in NQ right here. Let's see if we can come back in, trade a little tiny higher low. And then something like that. But look, we're still holding that 200 level. So it is choppy, but the 200 area continues to hold. We have not seen a successful break below that. We do have a divergence here now. ES took out IB high. NQ is nowhere near that. Similar to yesterday. Yesterday, there was a divergence between ES and NQ at the IB high, which is where I took the short. So this is moment of truth here. If we can hold this 9 MA here on the 2-minute, both ES and NQ, then we can shoot up. Yeah, once it, let me see.
You guys think I'm kidding, but I probably after the stream here, I'm gonna go load up long or OJ and Cocoa. I'm not even kidding.
Give me that Merritt special.
The CoJ.
No, it's not ready. Just relax. They woke up.
The cone of shame. You ever seen that movie Up?
The basketball one?
No.
Oh.
It's about the old man and the little.
Oh,
and the
yes.
With puts all the balloons on his house.
Yeah. Dude, chill. Okay, you're going down.
All right, Yoda24 says it's a really bad idea. Just for the record, let's speak the prices for the clip. CoJ, which is the combo of long Coco and long OJ, we are currently at 32.26 and 171.95.
Oh, there it is.
There it is. Just for the clip. Just for posterity.
I didn't even say EMA at all. When was that? So we created that higher low here. We pushed that a little bit, came back in, created a higher low, and hey, don't do that. And pushed out. That's the move I was trying to get with this earlier entry, but stopped me out before it went.
You know, Mr. Ratchet, it's they say that I keep hearing from other online experienced traders the market was tough for both February and March. Is there any truth to that? Just curious as a beginner. From my seat, I get to watch a lot of traders, and it's really a mixed bag. You have some people who are thriving with the elevated volatility, and you have some people who have kind of gotten lost and been struggling. And quite frankly, it seems to be like that conversation seems to be amplified whenever volatility spikes. It just seems to be a thing that people start to talk about, like, oh, this is just such a crap market. It's really, really tough. Nothing's trending, blah, blah, blah. And you have other people who are maybe quietly killing it or publicly killing it or whatever. The same thing happens when things are quiet. Some people are killing it. Some people are in a drawdown. Sometimes drawdowns are like random, just part of your equity curve. Sometimes drawdowns are self-induced when you start trading like a jerk. Sometimes drawdowns are market-induced when you don't adapt to new volatility regimes or things like that. So if you look at a handful of traders at any time during the year, high volatility or low, you're going to find some that are struggling. You're going to find some that are thriving. And I think knowing like conditions in which you and your systems perform best in is really like the ticket. That's where you want to get to, I think. Being okay being in a drawdown is another thing that I had to learn the hard way. We spend most of our careers in drawdowns when you really think about it. You know, you only hit those new equity highs every so often, and then you're kind of maybe treading water or maybe drawing down, but both of those are technically a drawdown.
I think people don't understand that you're always in a drawdown.
Yeah.
I mean, you make a new high, and the next day you're in a drawdown with one loss. No, come back.
One of the strongest indications of a really strong trader, and there's a guy I'm working with right now who fits this bill. He's in a drawdown, and not just like one trade off of equity highs, but an actual drawdown, a significant one. And he's okay. He's not freaking out. He's not pressing too hard. He's not trying to make it back in one trade. He's not doing any of those things that can so easily be done and make your drawdown worse. He's cool, calm, collected, and just working on his process and working on his research and working on the things that he wants to do to improve his trading, and not necessarily quickly fix the drawdown. It's super important, super important.
All right, so I took a short, but this is my IB strat, which is something different that I am forward testing. So we'll see how that works. But this account's probably done. It's very choppy here.
Tough tape here in the middle of DVA, guys. My goodness. Look at this.
Yeah, look at that.
Big relative volume for this 3-minute period. We are over 200% relative volume here, so probably some type of a headline. But this should not surprise you if you're trading at home, right? We are in a headline risk market right now, and so this is just a daily occurrence for us. Gold pushing highs.
Now, separate from that, guys, look, the 200 zone held, right? So
crude moving down.
We wedged up, we bounced, we tested it once more, and we rallied back to that 340 zones that I talked about. There was nothing bearish about this price action here. All my trades here were looking for bullish moves here because we kept holding the 200. But what a strong candle, huh? News probably came out. What was that?
Boy, it would be nice if I was just a 30-minute trader.
Yeah, production did do me dirty last week.
What'd they do?
I took a 1 hour loss on a trade, and then they started playing "Must Be the Money," and I'm like, "What money, guys? The money went away from my account."
If you want to come take a ride with me down back of the benzene.
It was funny.
Why must I feel this way? Must be the money.
But yeah, what money? We're getting that higher low on the daily that I talked about, guys. That's all I've been focusing on with my trades. Were longs in this area. No, it was very choppy, but we never invalidated the lows again. I would say like a execution error on my end was that I closed my last partial on the original long because this did look like it was going to break lower, and that was a mistake on my end because I would still be in this partial here. But so far, the higher low has held.
Put on a long.
All right, but show this for higher prices if you are long. I'll continue to focus on longs as the session ends here for me.
Scale some there into the prior little high.
Oh, very nice. Man, semis are so strong.
You love a strong semi, don't you?
Hell yeah.
Someone was surprised that I knew the lyric to that song. I mean, I'm class of 05. That was back in our heyday.
Yeah, that was prime.
We'd listen to that in the limo going to prom.
That was prime Nelly, Ludacris.
Yeah.
Busta Rhymes. Well,
Yes.
Busta Rhymes was like towards the end, but yeah. Who else? I mean, that was towards the end of Lil Wayne with Carter 5.
Lil Jon and the East Side Boys.
Lil Jon.
Hey, good morning, boys.
90s rap.
Hey, good
Nothing
morning.
beats it.
What's up? What's up?
Yeah, we're doing
90s?
We're doing 90s and 2000s hip hop nostalgia again. I think we've done this every day this week. I love it.
Oh,
Yeah.
really?
You can't beat it.
Nope, you cannot beat it.
And by the way, I was class of 02, so I'm actually the OG here.
There you go.
03 here, baby.
Okay.
Mm-hmm.
You also can't beat 90s and 2000s country.
All right,
You know what
leave.
we do with country music, Merritt? We put it in the trash can where it belongs.
Yeah, you can leave now, Merritt.
No.
Ruin the party. God damn it again, Merritt.
I like country jams. It's okay. I don't know about that. I like modern country though, for sure. I'm listening to sad boy country music as we speak, trying to figure out which side of this market I want to be on.
What class was I? 2010. These guys got
I'm on status
a
against
lot
all
of
you.
years on me.
Listen, can't beat it.
You're my senior, brother. All right, guys. You guys
You
enjoy
just call
your
me Uncle
stream.
Leo.
Yes. Good morning, Unc.
Sir Leo. You guys enjoy your stream.
Yeah, enjoy it,
Hey,
fellas.
you guys have 2 more minutes. You can't leave yet. What the
Yeah.
hell?
What's this? Everybody,
Clocking out.
Well, not on
58
time
seconds. Come on. I'm just kidding. You guys have a good one.
Enjoyed it, Chris. See you,
All
brother.
right. Yeah, you guys take care,
See you,
chat. Bye-bye.
well, good morning, Mr. Leo. Good morning.
Hey.
How you doing, bud?
Pretty good.
Good.
We're moving. Holy.
Yeah.
Somebody's really angry on this bid.
Mm-hmm.
Every time we hit these overnight lows, they do this. I mean, you don't even get a second
Nope.
to take a trade.
Nope.
I wasn't around for the open, and I missed this short, missed this long. But, green levels, very important for me.
Yep.
I would like one trade idea here would be this OR mid retrace, because now, looks like we're about to get it. Okay, we're just going to go through it. So I don't even need to consider that one.
Yeah, my ES candles are behind the actual book, so
Oh, sick.
yeah,
love
I can't get it's so much volume. Even the volume candles are furious at the moment.
I'm getting DMs from other people saying, "What the fuck is the market doing right now?" I don't know. That's the answer.
Well, it's going up and then it's going back down and then it's going back up.
150 point. We're trading pump.fun. That's what
Yep.
we're trading.
That's right. Instead of a character from a 90s Saturday morning sitcom pumping your coin, it is the president sometimes. So
Does anyone actually know what the headline was? I don't know. I think this is a good short, though.
I never look. I have been short all day. I have made a decent amount of coin fighting the beach ball. I don't know if I'm gonna get back into one. I don't. Yeah,
I'm gonna take a run at it.
Okay.
I mean, we've done this 100 times. Why not do it in 101?
Yeah, that low sucks on ES and NQ. I wanted it every time, but they never let me get to it. So, I hope you get it. I'm sad you weren't short from that OR mid. I assumed.
I didn't even have the charts open.
Sad. Sad. Who came up with the beach ball analogy? Because people keep saying that I've said it and no one has heard of it, and I just don't want to be taking credit for it.
James Dalton.
Dalton, there you go. Big JD.
I really wanted to see this move, so I'm going to get out of the way. It may go without me, but
I mean, look at these turkeys absorbing this right here.
I know. It's good short. Fuck.
Yeah.
It was waiting for me to get out. All right, whatever.
Freaking turkeys.
I love the Selma clips are very good. I don't know, man. I don't know what it's doing. We've built a node up here, and there's a single print forming on ES. So, I don't know.
ES has I broken from range?
Yeah, it has.
Oh, let me pull it up.
It's got a single print from like 11 to 14. 6611, 6614, somewhere in there. I don't think it's confirmed yet. It's last period, so this one has to close.
Sure. What's going on, chat? We've forgotten to speak with the chat.
Oh, sorry. Good morning, chat.
How are y'all doing today?
Good morning. Good morning. Ooh. Somebody says it's an insider trading market. They're trying to trigger me.
I still like this short. I just want to see this, play out a little bit more. Getting a big volume node right here.
Yeah.
With lots of absorption. I'm going to jump back in this.
Do it.
I'm just going to give it a little extra room than I normally would. But I think if it works, we should get a decent amount of downside here. I just need to get below whatever this 85. Yeah, 85.
There you go.
Don't do me like that.
Nope, just refreshed too. Yep. Yeah, I still don't see. Yeah, I can't get into it either way on ES. And honestly, NQ's moving too fast for me to glean anything from the last couple days. I like that absorption. If we can get below this seller at 20. Let me clear that up. All right, my chart caught up, so that's good. This is a good question. I know the answer to this, but I'll ask Leo so he can tell you. Leo, any reason you don't set limits for your profit targets?
I just manually cover. There's the main reason is I basically cover 15 to 20 points in profit for my first scale out. But there are times where the market will just run right way past that 15 to 20. And so I want to give it that opportunity to do that. And so I can just let that momentum take place. I'm pretty disciplined about taking the same, generally speaking, from a profit standpoint. But if it does run, I'll let it go for another 10, 15, et cetera, before I start to TP, start to scale out. So that's the main reason. But I think most newer traders should have set TPs and just like get in the rhythm of, putting a position on, kind of having your set brackets that get taken, et cetera.
Yep.
And then as you evolve over time, give yourself the freedom to use kind of a more of a manual discretionary approach when it comes to taking yourself out of a trade.
Yes, when your vibes advance, then you can see.
That's one way to put it.
You can see the opposite vibe, and when you run into the opposite vibe, you can be like, my vibe is getting lower. I need to cancel that previous vibe. What is this doing?
The level of annoyance here is growing.
Yeah, man. This has been, This is the brutality of the day for me, for sure, is we get these like, I don't know, what was this sell? We sold from here back to the overnight low and then immediately right back in like 15 seconds?
Yeah.
And then now we're just here auctioning the piss out of this.
Mm-hmm. I may just flatten. Yeah. It's just one of those trades where I just want to see it go. I don't want to sit in it. They're spending too much time here where it's like, okay, that's a lot of absorption. All the things that I want to see. We're building a volume node. We're seeing lots of absorption on the offer. But, after a period of time, there's going to be this is going to be kind of more or less acceptance. And so I don't want to be short right in front of a freight train that's about to come.
Yeah, it's that fine line between like,
the other part of it is like the frustration of the trade itself. I don't want to be frustrated on trade. Do I take myself out early sometimes? Yeah. I mean, we've seen that multiple times on NT Live where I've taken myself out of a trade, for my own reasons, and the markets ended up going in the direction that would have been a nice profit for me. But I don't want to be frustrated or, whatever on a trade just because I'll manage it differently. I want to keep myself smooth and cool.
Yeah, look at this top. I just can't, I hate being in stuff like that. And red team, blue team here, this seller might win, but every time they get back down here to this 285, they just refresh and then slap it back up again. So I don't know.
Yep.
It's been a week. It's only Tuesday.
All the things align here for this to play out, to the downside a little bit. But
I will get in lower, I think. I think that's what I'm
momentum.
going. Yes.
Yeah.
I need this dude to stop refreshing for sure. What time is it?
Dang.
Is London still closing?
Short here.
I know. It's getting better.
Mm-hmm.
If they can clear the mid, that would be good. Yeah, beach ball. Nah. Yeah, I don't know. So much stuff. This has happened to me like, I don't know, almost every day. There you go. Now it's going to go. This has happened to me almost every day for weeks. It's just like, I get in these spots with conflicting stuff. Like we're above the V range high on ES. We've filled both gaps. We're holding back above previous day low right now. ES made that volume node. So I want to be
like seeing that actually. I'm short here again. 03. I just like seeing this little poke above this little micro distribution and kind of a return.
Yeah.
Somebody just lifted 75 lots there to 03. I mean, there's lots of passive offer side activity, right? So they're still present. The offer is still present here.
The sell is out there. The sell is always out there.
So is the bid.
I saw a 1,000 lot guy back on ES today, but he pulled. He did not get filled at all.
Did you find the mysterious order transactions from yesterday?
I no. A couple people sent me footprint screenshots, and I don't know. I've been debating whether or not I wanted to rant about that today. I'm still debating whether or not it's
chat.
Worth
What can
a
we
rant.
do to really rage bait Stowe here on the rant? Should we do this?
If I can't find a trade, then we might be able to rage bait me. I don't know.
Tell us about the order fill, Stowe.
Come on, do it.
Oh man. Yeah, so I don't know. I saw this tweet everywhere. Like everyone was picking this up and putting it into their Chat GPT or Claude and then spitting it back out in a different way. That was basically the gist of the tweet. I don't know if you saw this because it was everywhere. Was someone bought $1.5 billion and they didn't specify notional. And I'm not trying to be the notional nerd here either, but they didn't say what the $1.5 billion was. They say somebody bought $1.5 billion worth of futures 5 minutes before the Trump tweet thing. And they also said they sold some CL as well. So like, I didn't look at oil because I don't have that chart pulled up, but whatever. This tweet blew up. It went everywhere. Like this is some sort of magical thing. Now, I love wearing a tinfoil hat. It's one of my favorite things to do. Also, Leo, you and I have said this into the microphone a bunch of times. Sometimes weird stuff happens right before news comes out. Like right before a tweet. We'll see the book get extremely weird and somebody will slap a bunch of lots in somewhere. And we're like, whoa. So I also believe that order flow always knows and somebody always knows. So I'm not trying to not be part of the tinfoil hat gang. I love being there. However, I don't think anybody that tweeted this knows what the hell they're talking about. Because, I mean, order flow has receipts. Also, $1.5 billion of notional value in ES, it's like 4,500 lots. It's not really that much. If you watched the book yesterday,
but did they say it was in ES futures or like the SPX complex? I'm like,
no, they said ES. That's where I'm pissed.
Okay,
because chat. If you don't know this, the best part about futures is we get to see the whole thing. There's no dark pools. There's no
damn man. All right, I'm out of this trade. Keep going.
There's no dark pools. Futures has receipts. Literally. You can look at every single order if you want to. You can look at the totality. You can look, the sum of the bid and the ask, all these things. You can see it. So when people make salacious claims, and I'm also grouchy about this because it's like, this is what I've seen the internet and Twitter devolve into, is it's just like, I don't know, let's just make up a bunch of lies and get people to click on this. So that's why I was getting grouchy about it yesterday. But did somebody buy 4,500 lots? Like, maybe. That's not that much. I watched a guy buy 1,000 lots like 8 times yesterday at once. I don't know. But it got clicked on constantly. So anyways, I was looking for that receipt. Aaron sent over a decent footprint. A couple people sent over decent footprints, so that was cool.
But did the footprints confirm?
I mean, there's not really a spot in the footprint that you can see someone doing anything.
Did you replay the time and sales?
Nah, I didn't go back through the tape yet. I was gonna.
Oh, well, you got to do that. I was gonna get back in this short. I'm not doing that. Why would I do it? It's your.
I couldn't get it to load.
It's your curiosity.
I know, but I couldn't get it to load on the replay last night when I was trying to do it, and then I was like, "Am I just getting too grouchy about this for no reason?" So then I went and finished watching the Batman movie that I was trying to finish.
Are they really gonna? Oh my goodness! What are we doing here?
Oh no.
I was like, all right, this short's gonna start working out here. Just off of like the edge of this profile, slightly a bit of a new high. But we have a Gaussian profile, right? It's rotational. Makes sense to be short up here. But they're just jamming it right back in my face. So
yeah, it's grinding higher now.
I am not going to force the issue. I will let this play out and give a better setup. Stowe's been the disciplined one to not even take a stab at it.
Dude, I mean, you want to see how many stabs? Look at these stabs.
I believe you.
I used 1,000 knives already. Trying to be short. This knife came right back into my eyeball right here. And this was the last one. It hurt so much. I was like, okay, never mind. I hate you. Stupid short.
Am I using NT? Yes, I'm using NT. Do you think that NinjaTrader would have me on here using some other platform besides NT or TradeAbate?
Or TradingView?
Do you? I'm just joking around. Yeah, it is. It's definitely NT. We ride or die. You're with me? I don't know. Sometimes I just have a bad day. I'm down like $100 right now on these massive trades I'm taking. The IQ of some people in chat. Well, DC Burnside, why don't you just call them out? Name names.
No, don't.
If you're going to be rude.
No, do not.
If you're going to be rude, you should name names.
Everyone should be nice. It's only Tuesday. I know the market's a little annoying.
It feels like Wednesday.
It does feel like Wednesday a little bit.
You for one? Well, that's some humility at least. The instigator. Damn, there goes the short. This is,
Nah, they're still I don't know.
The frustrations of trading NQ sometimes are very real. Can you talk about your volume profile timeframes? Yes. Okay, so this profile right here is the session start to now. So it started at the RTH session open. So this is just the regular trading hours, which starts at 8:30 Central Time until now. Then these two profiles here are a swing from this low right here. So from 183.75-ish, right, up until now. So this profile and this profile are anchored to this low. And if we make a new rotation of 60 points to the downside at this point, then it would reset the profile to anchor to whatever that high is that we anchored from. So it's always adapting to the latest leg of a market. So right now we have an up leg, and so we're watching the profile build from this low to the current area. I think price is willing to go to 425, so shorts ain't it for today. Cool. You're talking about your trading strategy, and we're discussing what we see. I'm happy that you think it's going to 425. I hope that you're long and that your target is 425, and I hope that you take profit at 425.
I would take profit at 419 if it were me.
What time frame is that on? I don't understand the question.
Trying to get me to short this.
There's no time. You're going to short it? Okay.
They're trying to make me short it.
I mean, we have a very rotational day after yesterday's rotational day, and we're at the top edge of the range. However, we are still making new highs.
Yeah,
so that is, the thing is that when you're trading rotational markets, you're going to have to be willing to take a stab at high of day, low of day type trades. I may actually get in this too. I'm short here.
Be somebody,
44.
sellers.
Did you get in?
I did.
Okay.
Yeah, this is fine.
Are you like the real life scenario of the yes, this is fine meme?
God damn it. This guy up here, 1,000 lot guy again. I hate this guy.
Is he on the order book there?
He is. Yes, he's sitting at 40. As soon as he got on there too, it turned into Magnet Town. So it's fine. I still like my short for the same reason. I hate seeing that pop up. So it's okay. I can get stopped here.
We're really they're running gunning every time.
It's Piss Missile Tuesday is what they call it, I believe.
I thought it was I don't recall that. Okay, stop me out. Leo, explain why you wouldn't use the entire session volume profile, please. This has been a dilemma for me. So here okay. Can I draw this out, guys? Can we do like a session? Can we draw something? Do you mind?
Do it. Let's do it.
I need a blank canvas. How do I make a blank canvas? Okay. I'm just going to make this my screen. Okay.
Oh,
are you ready?
Nice. Yeah.
Okay. So you have, let's just pretend. I'm going to get so yelled at for this, honestly.
Really?
Okay. So let's just pretend that there's two sessions, very distinct. I don't know why this one's longer. Don't worry about it. Because it's actually the opposite. Hang on. Okay. So we have this session here. And then we have a new session here. And we refer to this as Globex. And we refer to this as RTH. Guys, these are lifelong lessons you can't miss. Okay, so if you were to measure volume, just total volume throughout this session, right? So this starts at 5 and ends at 8:30, right?
Yes.
So you have compared to this session, very little activity. Now this session, you're going to have a big open, and then you're going to have a big close. So what you get on a volume basis is something like this. Like if you kind of normalize out and average it out, right? So you get like a surge in volume at this point at RTH, right?
Because that's the time when all the markets are partying at the same time.
Right. This is when the stock market's open. So stocks are open. This is when the players that actually move the market are active in trading. Now, are they not active here during Globex? Did I say that? No, I didn't say that. I said they are the most active during this window. Now, there are market makers, obviously, or people that are providing liquidity to the market. They do various activities. I'm not suggesting that doesn't happen in Globex. But as a rule of thumb, the volume that's traded in Globex is just a tiny ounce of the total volume that's traded in RTH. And so what I would submit to you is that volume means two things. It's a measurement of participation, and that participation is a measurement of how many buyers and sellers are being active in those markets. And so personally, I don't totally ignore like this Globex's activity, but I focus on the volume and the volume distributions that we talk about day in and day out, and the build and lack of build of volume, etc. That's what I focus on during the trading session that I trade. I don't trade Globex. I don't really trade pre-market. And so for that reason, I focus on the profile from a volume perspective that has A, the most activity, the most participation, and B, is the most relevant to the time frame that I trade. So do I totally disregard and ignore what happens in Globex? No, because every morning, I look at, okay, so here's my 60-minute chart. This has Globex and RTH. Sorry about the drawing. Let me clear those. Okay, so this has, it's just a candlestick chart, right? Has the volume profile for the whole duration. It's a 4-week rolling profile. So we can see all the volume builds, that are a combination of Globex and RTH. It just builds everything, as well as the price action that has occurred during that time frame. I also review, like before the session starts, I go, okay, what happened last night, right? Like, what's the general consensus here? I do obviously look at the pre-market profiles, and we're going to get a nice short off of that V-range high, but it is what it is.
Oh, wait till you see what's happening on the ES Dome.
Oh, great. Are you short again?
No.
Wuss.
No. Hey, number one, no. Number two, there are now 4,000 lot guys.
1,000 lot guys on the offer, and you're not short.
And 3 of them have been filled, and there's 2 left up there.
So hold on. So there's 1,000 lots on the offer, taking fills, refreshing, reloading on the DOM, and you're too afraid to get short.
I got 2 sets of single prints, bro. I can't fight the tape up here.
Oh my goodness. Listen to this kid.
Somebody
barely just said you're missing a short. Yeah. No. Okay, so here's another question. So do you not consider the overnight high and the overnight low as a point of interest? Yes, absolutely. Because that level getting taken out, either the overnight high or the overnight low, is usually, like on a 20-day average, is about 100% of occurrence.
Mm-hmm.
So I do have the overnight low here. I have the overnight, right here in purple, pink, overnight low, overnight high. So yes, I have those levels, absolutely. And they're very important to me from a, if we're 10 points away from the overnight low and it hasn't been taken out yet, am I going to look for a long? No, because I know we are so close to the overnight low that that stat of one of those levels getting taken out is 100%, that, hey, we're likely to take that out. Does that keep me out of a good trade sometimes? Sure. But on balance, it keeps me out of bad trades too. So definitely keep that trade ES twin. What?
What's that? What's the IB? What's the IB break probability? I don't remember. It's up there too. It's like 90 or something.
Either side breaks on, I don't remember.
Yeah. It's up there and like almost always. So that's why I've got IB on there. And usually for me, once those stats are checked off, I'm like, well, how much do I have left to do today? Oh, man.
Good points, Leo. We trade a global market review and is a good habit. Yes, of course. Yeah, a review. What happened overnight? I just don't use the volume profile from overnight. Hopefully that's a good explanation. Okay, so somebody was asking earlier, the rotations, right? So here we made a new high. That met the criteria for basically what we would consider like a reversal. And so now the volume profile that we see here is anchored to this high. And so this happens throughout the day. And the benefit here is that we can see now, earlier, we had a bunch of blue delta. So the dominant volume that was hitting the tape was on the offer, right? So there was lots of offers, that were being lifted, market was going higher, et cetera. There was some absorption right here. So we kind of watched that in real time. Now, from this high, what do we see as dominant? It's very sell-side dominant, right? So we've gone from orders that are filling the offer as being dominant to now orders that are filling the bid. So now sellers they're aggressing into this market. So we can say that as a general rule here, sellers are dominating the tape. And if you were watching the time and sales, you would see your time and sales, if it was, by color, et cetera, that would be very red or blue.
Blink, blink, blink.
Or whatever color that you have for, hitting the bid.
That would be cool if they were opposite. If somebody had that going on for themselves. That would be weird.
Mm-hmm. Yeah, that would be a kind of a mind warp. Here. I can't believe that as we were going through that explanation, you were watching all this activity on the ES Dom and you didn't get short. I'm frankly disappointed.
I see resting liquidity like that, and
I was telling you to get short.
Well, number one, that's the first reason I wouldn't do it. Number two, sorry, chat. No,
I'm short. Simple.
No offense.
Yeah.
Listen, the correlation is not gonna be there forever. So don't get married to this CL up, ES down stuff. Because when it flips, it's going to flip. I think these dudes are going to get filled up there. That's why I don't want to mess around. Yeah. So I'm not interested in scalping short off those folks. If anything, I might buy 66.20, 66.19 if I get a chance to try to go get those 66.42 guys. But that's just how I look at resting liquidity. Because I'm a psycho and a bit of a contrarian. All right, tactical trader likes the same spot. Okay. Yeah, there's nothing bearish about this price action. I mean, whatever this is annoying. For sure. But yeah, I don't know. Higher highs, higher lows the whole way up. Now we're just grinded into this mess. They still up there? Yeah, now there's a 1200 guy. That's about 4 million notional. Maybe I should just start to explain the lot size and notional now.
You can sound super smart and sophisticated. Well, that was 4 million in notional value here that was on the offer, so I'm going to join that with my 5 micros.
That are often in a simulated environment, by the way. Do you guys want to know the notional price of a simulated micro contract? It's 0, by the way.
Where are you trading these days?
Oh, well, I have lots of places, but my favorite place to trade is Lucid. I'm working on this Flex eval at the moment. Should be passing it soon, as long as I don't do anything stupid. But I also trade. I have some MFF stuff, and then I have some TPT stuff too.
Yeah, you're mixing it up there.
Yeah, I like to spread it around. But honestly, in times like there's another 1,000 lot guy up here at 40.75 now. That's cool. This is fun. Yeah, I don't like to put my own money on the line when the market is doing extremely dangerous things, because one of the things that you sign when you sign up with your brokerage account is acknowledging that you can lose more money than you actually have in your brokerage account. So that's always in the back of my mind. So I've been working on evals and fundeds and grinding away that way. Also talking to Claude. I do that a lot too. So it's been a good time. I don't have I thought I was wearing my Lucid Trading hoodie today. Did you say I got swag? It's pretty sick.
You got swag?
I did.
Nice.
Yeah, Lucid prints on the same hoodies that I use for the band. So I was like, yes, this is great. And our guitar player runs a screen printing shop, and he's a bit of a garment snob, I guess is what I would call it. And I don't know if you know any screen printers, but they'll often walk up to you and say, Is that a Gildan blah blah blah? Is that a Comfort Colors?
Gildan is like known as being like the brand used for shirts.
Yep, that's one of the big ones. But yeah, those Carhartt ones are good. Independent's a really good company too. Suspicious Profit says, how are you seeing 1,200 contracts at 66.42? I see 1,277 lots.
Do I use an ES-DOM? I normally do. I normally have one side by side. I don't currently. Is that a mistake on my part? Probably, because I use information off of what is happening in ES, and the issue is that my chart book and my setup is always in kind of beta mode for testing various things. I would love to get an ES-DOM like as my normal configuration on my view here.
Do you want me to help you make a good chart book for you? I could help you out with that if you want. I'm pretty good at it.
No, we actually had to disband you from being able to make chart books because of the ugly chart. I don't know if you remember that.
Everybody remembers ugly chart. No one forgets ugly chart. That bit will never die. But it is dead. I think I still have the colors saved though. I think I wrote down those the RGBs for those just so I can maybe make everybody sick again eventually.
You would do that. All right, I'm going to take a little stab here. I'm going to explain this while we're in the trade.
Okay.
So we have this we're at the edge of the profile still. We have this, not a liquidation, but just kind of a little swing short. And we've retraced, a decent amount of that. So if you saw a minute ago, there was a kind of a sell zone. There's these markers or these levels are kind of automated based on the rotations of the market. So I'm literally just playing off of that retrace. from the swing high, and seeing a little bit of that same level of absorption plus the V range. So it's just like good risk to reward short trade here. So that's it. And we're going about 15. Come on. It'd be great to have had a fixed TP there for 15. They're just going to force me to take less than my normal. It's like every short that I've gotten in has gone like 14 and a half, 15 points, and then bounced right back like it's doing right now. It's very, very annoying.
I mean, that point of control is still at 24,200 down there. I don't, yeah. I wish I could try again up here, but I cannot. Live vid V range are magic lines, and they're quite effective. That's what they mean. Man, look at this dude. It's just like they're just stacking. These people get filled. This is going to be awesome.
They're still doing it?
Yeah, I mean, there's 1,200 at 42. There's 1,000 at 43.75. There's 1,000 at 46. There's 1,000 at 47.
All right, we're going to start to cover some of this.
Come on, baby. Pull for Leo. Ah, look at the refresh.
I think this is.
Think it's going?
I don't know. We'll see.
Yeah.
Put the trade on. We've taken some profits.
Cool.
See if it can't run.
Well, suspicious profit. I don't know what to tell you, bud. You sure you have ES? ES June 26. Let me see. Let me try to help you out. I don't have that much depth on this. Okay, suspicious profit. So you're looking at MES, and even though MES and ES are very correlated, they are two different markets. So the orders that you see on an MES DOM are for the micro contracts, and the orders that we look at on the ES DOM are for the mini contracts. And sometimes that's why you'll see, like, occasionally there will be a small spread between the two, because they're almost the same thing usually, but they are two different markets. So that's why. Yeah, snakes. Yes. There is a difference in the DOM between MES and ES.
Yeah, it's two independent, different order books.
Yep. Yeah. Yeah, that's it. You're just like, I mean, I'm glad, because I was starting to feel weird. Everybody's telling me they can't see the orders I can see. I'm like, all right. This is how I feel reading the internet, Leo. I'm just like, Grok, is this real? Grok, is this real?
Oh, my.
Snakes, I like to look at the mini for everything. I don't look at the order flow for the micros. I don't look at the volume profile for the micros. Everything I have on my chart is for the mini. I don't know if there's a benefit or not to looking at a different one. If there's, I mean, if you can find a way to trade off of MES or MNQ order flow, like, I guess that would be a benefit if you could figure out how to make money with it. But I look at the mini, and for NQ I trade the micro. I'll trade the ES mini usually. No worries. No, yeah. No, you're not dumb. Don't say that. All right, all those dudes are gone.
They left?
They left. They all pieced at the same time.
Suspicious.
Indeed. I don't think that would count as spoofing. I mean, they were standing there for like...
No, that's not spoofing, guys.
Yeah.
Spoofing is when you place an order that you don't intend to fill. And it has to be within a certain level of the last traded price and then pulled. So the order has to be there has to be close to the last traded price. I don't know, like within a certain number of ticks. It has to be on the order book for a short duration and then pulled. So the intent of the order is never to get filled. Big orders sitting on the DOM for hours and hours and then pulling is not spoofing. That's just, they're removing liquidity based on, other factors, not just because they put the order there and then pulled it off. That's not spoofing. Spoofing is a way to attempt to cheat the market to moving in one direction by repeatedly placing large orders to I'm just gonna lighten up this trade here. Repeatedly trying to get the market to respond or react to large positions being put on the order book and then canceling them immediately. So they don't ever intend to get filled.
I never thought that I would be here.
Yeah, stream side, you literally could just be changing, larger position players that, they changed their mind. Literally. You guys have never changed your mind in a trade?
I never thought I'd be defending
them the
they and them this hard, but I really have been.
I scratched out the rest of these because we're really not cooking. So dare we ask, is the bottom looking poor or healthy? Wow.
It's so poor. It's disgusting.
Chris, Stowe.
It's the worst. It's the worst low ever. It sucks on both NQ and ES. Nobody likes it. It doesn't have any friends. That's your answer.
Good morning, Brent Tintin.
Good morning, bud.
The low is poorer than you. Are you sure about that?
Does that clip still exist? I really loved that one.
You sure about that? You sure about that? You sure about that?
Oh, somebody asked me about my old man club. No, I didn't. I did not swim today. I did some kettlebells this morning instead. But thank you for asking. Tomorrow, we go back to the old man swim club and we see what they're up to. Leo, did I tell you about this? It was a very big day for me yesterday.
Wait, what?
The old dudes at the pool where I swim early in the morning every day, they finally talked to me yesterday and asked me how my swim was going. And it was a pretty big deal for me. I think I have begun to be accepted into Old Man Swim Club. So that's what happened yesterday.
Okay, like I don't think this is actually a good thing, my man.
Oh, it's great. It's good. It's fun. Because before, I mean, I've been going there for like 2 weeks, and everyone, like, no one said hi to me or anything, and I kind of felt like, I was a bit of an outsider because they're all talking to each other like, "Hey, Frank, how's it going?" Like, they're a bunch of Yinzers, like, "Yeah, Yin's down at the thing." "Oh, Yin's busy at work." "Nah, not really, not really. They got me working out of town sometimes." This is how they all talk. But yesterday, they started to give me some nods, and then one guy asked me how my swim was going. So I was like, "Oh my God, I might be in."
Wait, is this at the local YMCA? Like,
Yeah.
Wow, I picked off the name like that.
You did, of course.
Holy. What about the ladies as you jog around the neighborhood? Are they saying hello?
No. Those people are stuck up, bud.
Still lives in bougie town.
I do not. Well, I do, kind of, yeah. But the YMCA, those are my people. These old dudes are my people. This is salt of the earth territory. That's why I'm excited to be around and involved with these folks.
Mm-hmm.
What year is it?
Oh, I actually haven't seen that lady in a while. Man, you guys remember extremely random details. That's crazy. But that dog does still, well, I don't know. It's been winter, so I guess maybe I'll see them this summer. I haven't seen that dog in his sunglasses in a very long time. I don't know. I was an old dog. You guys are bringing up a dark point here. Still want to short this, Leo. What's wrong with me? What have I become?
I would. I absolutely be sure. I'm just, I'm not going to take it. What are your conversations like with Claude?
You talking to me?
Yeah. What do you talk to Claude about?
Oh,
the chat wants to know.
I ask it all kinds of things. I asked it to help me make a meal prep plan for a healthy diet. That was a fun thing. I made a bunch of breakfast burritos and froze them. You should have seen me this weekend. I made like 30 breakfast burritos. It was crazy.
Still, I got a question.
Hold on.
Oh, hey, Jim.
Jim, hang on. Okay. So I asked you what you talked to Claude about, and you ended the sentence with how many breakfast burritos you made.
Well, yeah, no. I was like, okay, I need to make some healthy food I can eat throughout the day. And so I'm like, okay, I need to do meal prep. So that's one thing. So I had Claude break it all down for me. And I'm like, all right, this is the Costco I go to. Help me get in and out of Costco as fast as I can. And it did. And yeah.
No. You didn't ask Claude to help you shop at Costco, did you?
Yeah, I did, of course.
Holy.
This is why they developed Claude.
This is why my memory was $1,200 because Stowe wants to ask Claude how he navigates Costco better.
Dude, have you been to Costco? It's a nightmare. It's terrible.
It is.
Costco
terrible.
is one of the best places in the world, man. You just walk in, you roam around, you get what you need, and you leave. You got to check out all the cool stuff, though, man. You got to go through the electronics section into the outdoor furniture. What cheap ass T-shirts do they have that are fucking buy one get one?
Well, I do that. I definitely do.
Like check out all the meat. Like there's so much fun to do at Costco, man. You're missing out.
Yes, you got to check out the meat.
Well, so Stowe, do you buy your swimming gear like your Speedo and your rubber hat for swimming at Costco?
I don't have a rubber hat yet. Do you think I should get that? Because the rest of them do. I think maybe I should get a rubber hat.
If you want to fit in with the swimming bros, I would say
okay.
Yes.
You're right. I do need it. Okay.
And then once you get that in the Speedo, if you could send us a selfie.
Please don't. No.
We can
I
use
draw the
that.
line here, Jim.
The producers are asking.
That's cool. If you guys want to see Stowe in a speed, I mean, I'm still just wearing board shorts. I'm not in Speedo territory. I haven't gotten good enough at swimming that I'm worried about the aerodynamics yet, I guess.
Oh my God. All right, breaking new
Jim.
ground here on NinjaTrader Live.
All right.
Appreciate you guys as usual. Let's give these guys a round of applause for a job well done today.
Thanks, Chad.
Oh, all right, all right. Am I seeing either of you this afternoon or no?
Not me.
Nope.
I don't know.
I'll see you tomorrow, though.
I've lost track.
I'll be on tomorrow, and then I don't know what, Thursday. I'm on twice Thursday. So you guys are getting a bunch of Leo in the next 72 hours, unfortunately.
Nice.
Look at this short.
No, I don't want to.
There you go.
All right, Chad.
All right, you guys. We're gonna end this with the quick edge report. Appreciate you as usual.
Thanks, Jim.
Thanks for being here with us, and I'll see you tomorrow.
Sounds good. Thanks, guys.
All right, real quick. E-mini S&P. Everyone's been talking about it. There was some chat about initial balance breakouts. So I went to the Edgeful website. That's Edgeful spelled with one L. Just to kind of see what we're up against from a US IB breakout point of view. Now, if you go back to the London IB, we broke out to the downside, so we had a single break, they would call it. For the E-mini S&P right now, that IB low was actually the low of the session, and the IB high was approximately, 66.11-ish, give or take a couple ticks. And we had a breakout above. So we had a single break above the IB. That's a 75.59% of the time over the last 6 months that we've had a single break. We've had, over the last 6 months, 22.05%. We have a double break, which means we would, and I did this by wick, not by candle close, which means those are the odds going back in time, or at least the percentage of times it's happened, that we'd get a lower low on the day today. And then there's a 2.36% chance that none of the above happens. In other words, we stay within the IB range. So we have the single break so far. Double break odds are not, 22%, not that high, but still a possibility right now. And we're trading pretty much between that JAX3 level and that 0 DTE put support level. And we're about 69% of the range today based on, if you compare it with a 34-period average range. So there is room for a breakout either way if you're thinking about that ATR or the average range. The other thing that's interesting in this chart, if you go all the way back to this benchmark candle yesterday, let me just kind of make this up a little bit bigger. This is yesterday. This is today. This is a big, I'm going to say big ass green candle. This is a benchmark candle. It's still in my chart, and it's going to be valid all week long for me as long as we're in this range. And again, I went to the body of the candle and I calculated the midpoint or the piercing line of that candle. And it's right there. It says 65.91 and a half, give or take a tick, actually. And that's kind of a line in the sand for me. So I'm looking at price actions based on, at that level. And yeah, overnight we had these overnight lows, but we immediately had an equal and opposite candle on a 30-minute candle. So that low was in, and then we kind of rallied back up above VWAP into the London IB. So we tested it again, as Leo pointed out a couple minutes ago. And, we just, boom, it was buyers brought us back up here. So we didn't sustain that overnight low. Instead, we just kind of wicked through it. We probed through it all the way down to 0 DT, put support, and popped back in. And look at my line in the sand here. That's 65.91 and a half. So we did have a close, we did have a doji, but now we're back above it. And that period that we're back above it is after the initial balance. So now we have a situation where this is really my area of support right now. This is really a nice kind of launching pad so far. And as long as we're above VWAP, I'm going to be all, cool and fruity. Again, I think that's another thing that Leo said a couple minutes ago. So again, VWAP is kind of in play right now. But we're above that piercing line. Everything looks a little bit more positive. There's a potential for a breakout either way based on the ATR. All right. Having said all that, appreciate everybody being here with us today at NinjaTrader Live. Couple quick announcements. One, we remember March 30th, we do have that Micro Arena Challenge with these 3 traders up on your screen. We have Selma, we have Tanya Trades, and we have Lumi. They are going to be featured traders in the challenge. They'll be on the leaderboard. You'll be able to track them and see what they're doing in real time throughout the day. $5,000 in cash prizes. If you want to join, you also could be on the leaderboard. Just simply go ahead and fill out the link in the chat or go to the website, and you could also participate for the live challenge with using a real-time NinjaTrader live trading platform. It's a lot of fun and educational. All right, having said all that, folks, we will see you this afternoon at 2 o'clock. In the meantime, have a nice, relaxing lunch, and see you soon.